US Real Estate Secrets Uncovered. And thank you for choosing to spend your Sunday with us for the next 6 hours at least. Don't worry, we will give you breaks. Everybody needs a few breaks anyway. We will have a meal break as well. And my name is Veronique Ficheux, and it is my great pleasure to be your host for this workshop today. So some of you may have attended the webinars before, so it's going to be a little bit more hands-on than the webinars. And please feel free to join from your computer rather than from a phone, because I'm going to show you a number of things that may need you to be on a bigger screen. And for easier viewing, being on the computer works a lot better. If you want to turn on your camera, good morning, Mr. Noor. It's nice to see you. It's my great pleasure to see you all. And if you don't want to, it's fine too. Just one more thing, at the bottom of your Zoom window, you have a reaction button. So let's practice using the reaction button right now. Everybody give me a thumbs up. Thank you very much, Mr. Noor. That was fast. Thank you, Miss Linda. Thank you, Hazik and Doris. Thank you very much. Today, in the Noble Sky team, we have Doris, and Doris will be your chat master for the morning. So she'll be the one answering your question. Thank you, Doris, as well as Hazik, who's going to make sure that everything works smoothly throughout the morning. And of course, as I said before, my name is Veronique, and I will be your presenter and your guide for this day. I will introduce myself a little bit more later. If you have a question, feel free to pop it in the chat box. I love answering questions, and our chat masters also love answering questions. So please feel free to give us questions. This workshop is designed to be a little bit more interactive as well. So for instance, when we do the research section, if you want to unmute yourself to ask some questions, feel free to do that as well. It makes it more interesting, and I love to answer questions, as I said before. So on that note, oh, by the way, I just wanted to tell you as well, if I'm looking this way, it means I'm looking at you. And if I'm looking this way, I'm also looking at you, but I'm also looking at the presentation. So if there are times where I look like I'm not looking at you, I'm actually looking at you. Sorry, that's just the way my screens are designed. And I'm sure you've noticed that a lot more these days, where everybody lives in the Zoomiverse. So welcome, and thank you for joining my Zoomiverse today. So as I said, this is Noble Sky International, and really what we're going to talk about today is the biggest rule of real estate investing. And some of you may have heard it before, but it's always good to repeat it. You make money when you buy, not when you sell. And what it means for us is we look at buying properties at substantial discounts to the market value, like not 10, 20% generally, but more closer to 60, 70, 80% or even more. So as I said before, my name is Veronique Ficheux, and I'm the head of training and development and the lead trainer for Noble Sky International. The name may have given you a hint, but I'm French. I have been in Asia for over 28 years, and I am currently coming to you from beautiful Bali, beautiful and rainy. So fingers crossed that my internet stays very, very good throughout this day, because sometimes when it rains, the line is a little bit wobbly. And if I happen to fall off the line, I will be right back. Bear with me. In the past, I was a fund manager. That was my first career. I was a fund manager specializing in stocks, growth stocks, specifically in the Asia Pacific region, which means all the way from South Korea down to New Zealand. That was a fairly big area to cover. And I actually was the founder of a company in Hong Kong, which is where I moved to 28 years ago, that was part of a French company. It's one of the largest independent fund management houses in France. I also have been a Tony Robbins trainer, working with Mr. Tony Robbins for 11 years. And I've actually been involved in this world for over 20 years. My first event was in Singapore 20 years ago. And as it is, I'm actually preparing to go into what I call my Zoom cave for a 10-day program, which starts this next week. And this gentleman here, this young man, that's my very important person in my life. He is my son. He is 17, thinks he's 27, as they often do at that age. And I've been a solo mom since he was born in Singapore 17 years ago. As I said before, when I go into my Robbins Zoom cave these days, this is kind of what I look like in my uniform. But when we could have in-person events, this was Mr. Tony Robbins. That was a few years back, and me, two people there. But I really want to introduce you to a very important person, and that is Mr. Ralph Said. Mr. Ralph Said is the founder and the chief investment strategist at Noble Sky International. And over his career, he's assisted 300, actually more than 300 investors now from across the world to invest into the US real estate market. When we opened these investments to outside investors, outside of friends and family, we actually acquired over 50 properties in 2 years, and we paid about 20% of the market value only. So Mr. Ralph Said is currently in the US taking care of our investors' properties, and he has a message for all of us to hear.
Many of us are looking for opportunities in life that will enable us to empower ourselves to drive towards our goals and purpose. Some of us might find that the jobs we had are just not enough and thus embark on another journey to win this game in life. I decided to take the plunge in entrepreneurship and investing, not in my own country, but rather halfway across the world in the United States. I left my stable job and started a real estate business only to be beaten, lost, and even more frustrated. I had to leave my family for months, my daughter who was not even in primary school, and my son who was just a toddler. But I badly wanted to win this game in life and provide them with the best, so I had that decision changed my life forever. Hi, Raul Said here. I'm the founder and chief investment strategist at Noble Sky International. I'm a proud father of two, Leila Mariam and Yusuf Aidan. I also count my nephews and nieces my own children as well, and I have my wife and business partner Sarah to thank for as well. They are my reasons why I have been working so hard so they may pursue their dreams and achieve their goals. Giving them the best to score in life was my objective. Coming from a broken family, I knew the financial pain and hardship that my parents had endured while raising my siblings and me. I value their sacrifices that have made me into who I am today. This attitude of persistence and tenacity has pushed me beyond my boundaries to create multiple streams of income in property investments. I built Noble Sky since 2014 and have achieved the highest standard and recognition my business has to offer. I'm proud to say that we are the only company in Asia that has enabled thousands of people from all walks of life from across the region to affordably own multiple portfolios of properties in the United States of America with no debt. I'm highly meticulous, and many who have worked with me will understand that I want the best for all my clients. I continually seek mentors and those more successful than I am in this field to gain more experience, and the intensive research we provide has allowed me to create life-changing decisions for my client. I presented them with my proposal, researched the desired property, and facilitated the whole process to suit their portfolio. Satisfaction on their faces and from hearing their voices after finally owning a profitable property that they never dreamed of before is the driving force for me. I will do the same for you because I was once looking for that purpose and I found my answers. I love connecting with people, and to me, it's not just about making a transaction, but more about having relationships built to last. I look forward to sharing my life's work with you. My life's work has empowered hundreds to realize a life they never once thought possible. My name is Raul Said, your go-to US real estate investment strategist.
So that's Ralph Said, and some people wonder when this started.
Many of us are looking.
All right. And it actually started a while ago, and in 2012, actually, even before 2012, Ralph read a book called Rich Dad, Poor Dad. And if you haven't read it, I highly recommend, even though it's 20 years old, the concepts in this book are really timeless, right? And so he happened to be in the US for a trip, a holiday, and he saw that there was a multi-speaker event that was happening in San Jose, California, and he signed up, attended the National Achievers Congress. One of the headliners was Robert Kiyosaki, who wrote Rich Dad Poor Dad, which is why he had signed up. And that's also how he heard Mr. Tony Robbins for the first time, who had everybody up and on their feet and clapping and very happy, as well as Donald Trump before he became president. But the person that really caught his attention was speaking about US real estate. And he had the opportunity to ask this person about US real estate, and was that possible for foreigners to do? And he actually said, yes, absolutely. Foreigners can absolutely own US real estate. So that really caught his attention, and he decided that this would be a good way for him to really put into work the Rich Dad Poor Dad principle, which is to not just work for money, but make money work for you. And it took a while because he built his nest egg in the middle. But in 2014, he was able to attend his first US real estate investment training about tax sales investment. And that workshop actually included lifetime coaching, and it cost a grant $20,000. Which is quite a lot if you think about it. But that knowledge has made Ralph and our clients much more than $20,000. So that's where it was really worth it. From then on, Ralph went on to create Noble Sky International and to invest in properties, first for himself, then for himself and his family and friends. And then in 2018, we opened this to outside investors. So before COVID and the Zoom era, and the Zoom era, we actually used to deliver this workshop in person all around Asia, and including in Malaysia, in Indonesia, a lot in Jakarta, and that was one of my favorite things to do. Short hop on a skip from here. We delivered these workshops in Vietnam, Thailand, Cambodia, Philippines. So we were present all around Asia, teaching people the principles that I will teach you or recap for you today. And really, all we do is we help investors acquire real estate in the US at substantial discount to the market value and with the right structure. It is very, very important that we have the right structure to acquire these properties. If you do not use the right business structure, you could end up paying way more tax or even having a lot of liabilities. I actually heard this story from someone not so long ago that said that he invested in Indianapolis and invested in Indianapolis, and he bought a rental property, and so far he hasn't received any of the rent, and he's apparently incurred a big tax bill, which he kind of doesn't understand. So everything needs to be done the right way before you even start. And that's what Noble Sky International does for its clients. So why did we choose US real estate? Well, there are several reasons, but one of them is purely the size of this market. It's really, really big. It's huge, in fact. 50 states on the mainland itself, but it's also a $36 trillion market. That's 36 and 16 zeros, 36 million billions. That's a very large market, right? And one of the things that a lot of people don't understand is that there are on average 6 million transactions in the US every year, 6 million. So whatever little transactions we do, it's really, you know, our 50 or 60 is like a drop in the ocean. What I found really interesting as well is the size of, if you look at the size, right, we could fit our entire countries, Indonesia, Malaysia, Singapore, and way more, even the Philippines, we can fit that in the US and have room to spare. All right. Oh, by the way, tell me where you're coming in from. Please type in the chat box. Tell me where you are located, just so that so we know. I know we have some people that are coming in from Singapore, and any other. Miss Kara, Singapore, thank you. Miss Linda, Singapore as well. Mr. Noor, thank you, Singapore. Okay, so it's mostly Singapore at the moment. If you're from another country, please let me know. Miss Doris, Penang, yes, it's on my list to visit as soon as it's finally possible. Thank you, Miss Nora. All right. So, as I was saying before, market size and abundance of inventory. So as I said, $36 trillion is a very large market. And as I said, also 6 million transactions every year. There's a lot of land in the US, right? And it's not a good that is lacking, though we want to make sure that we acquire in the right markets as well. The other thing that is surprising to a lot of people is that it's actually very affordable. In fact, the average property transaction is about $300,000, the average. Right? If you take all 6 million transactions, the average is $300,000. But once you take away the big expensive markets, such as the big cities, right? San Francisco, Los Angeles, New York, Miami, the $1 million properties that we can all think about. Once you take these away, it's actually very easy to find a property transaction that costs about $100,000. But of course, you want to make sure that you buy the right property for the right reason. It's also extremely easy to buy a property. I could literally see a house that I like on Zillow, call the realtor, and buy the property right there, right now. I don't have to go to the US. I don't have to go to the notary to sign any paperwork or anything like that. Yes, Mr. Noor, Zillow is one of the biggest US real estate websites. We will use it a bit later. It's called Zillow. It spells Z-I-L-L-O-W. Thank you very much, Doris. Doris's fingers are faster than my mouth. Thank you. All right, so that's something to think about. It's very easy and we can do everything online. We can sign all the paperwork online. It's legal. Fourth, land ownership. I did not know this coming from France, where before I moved to Asia. But in Asia, generally, as a foreigner, you cannot acquire the land. So I live in Indonesia, as I said. If I wanted to acquire land in Indonesia, it is not possible. I could marry an Indonesian gentleman. He would own the land. I wouldn't. You need to be Indonesian to actually own the land. So in the US, it's completely different. You acquire a piece of land with a house on it, not a house on a piece of land. So you acquire the land and you have complete freedom as to what you want to do with the land within the rules of the area, of course. And you not only own the land, you own everything under, in the land, and above. So there's you could, for instance, if you are landscaping your house, your land, and you find some gold on the house, on the land, it's yours. If you own a big piece of land that has a river that runs through it, the river doesn't belong to you, of course, because it's just water, but the land, the banks of the river do. Does that make sense? That is one of the reasons why a lot of people in Texas suddenly found themselves quite wealthy, because what did they find in the land? One of the things that Texas is famous for, they found oil, right? So suddenly they found themselves owning land that was a lot more expensive because they found oil and they were able to extract the oil and sell it. So something to think about. You own the land. Yes, even as a foreigner. There are a few restrictions. I am going to guess that if your passport is North Korean, you may not be able to own the land. But there's very, very few restrictions. I hope that makes sense. Give me a thumbs up if you're still with me. Thank you, Mr. Noor. Thank you, Mr. Hazik. All right. Okay. And have I lost everybody else yet? All right, Miss Linda, thank you very much. Help me keep your energy up by giving me thumbs up so that I know that you're still with me and I haven't lost you. Right? Thank you very much. Okay. So last but not least, price to value ratio. What do we mean by price to value ratio? Well, it's an important thing. It is possible in the US to acquire property at big discounts to their price. So we can pay a much lesser price than what it would be in other countries. There are some ways that we can acquire the property, and we will show you a few of those as well. So as I said before, when we started, the first rule of real estate investing, you make money when you buy, not when you sell. Very important to keep that in mind. And yes, as we said, it is both legal and possible for you to purchase property in the US for just $100. Does that sound attractive? Give me a thumbs up if you think $100 sounds attractive and yet a little bit strange. How would you be able to do that? Thank you very much, Mr. Noor. Thank you, Miss Linda. Thank you, Mr. Hazik. So there's many ways we can acquire properties, and some of them are actually valid in other countries as well. There's motivated sellers. Simple. Motivated seller is somebody that really wants to sell and will give you a discount. In particular, they may give you a discount if you are willing and ready to pay cash right now, like this. Of course, because they don't have to wait a month to receive for you, or several months to close the sale. They don't have to wait for the buyer to get a mortgage or anything like that. So this is an area where you can actually negotiate the price. Next, realtors. Realtors are basically real estate agents. You can acquire from realtors. That's what I was mentioning about Zillow. Wholesalers. Wholesalers is a typical American thing. I haven't found these ones anywhere else. And wholesalers are basically intermediaries that have access to both people that are ready to sell and want to sell quick for cash, and have access to a list of cash buyers. So they are not registered as realtors, though some of them are also realtors. And they basically make the money in the price difference between the purchase and the sale. Simple. You could go to foreclosure auctions. Usually the foreclosure auctions are related to bank-owned real estate. So that means that the bank owns the real estate, usually because somebody did not pay their mortgages. You could also go to government tax auctions. Mr. Noor, a foreclosure means if you haven't, or if the owner hasn't paid for something, somebody else is entitled to take the property. That's called foreclosing on something. Thank you. We attending a government tax auctions, and government tax auctions is also a type of foreclosure. I'll explain that a little bit later, but this is a good way. There are a few more, but that's probably enough for us to look at. This chart might be a little bit difficult to read, and I'm not going to go through everything. Excuse me. I'm not going to go through every aspect, but I just want to hit the most important prices, the important things. For instance, of course, the motivated seller will give you a discount on the price, but they are, like the realtors, very interested in getting the highest price. Right. So it's not going to be the lowest price. You may have some competition for this. You may have some people that want to buy from the more people than just one. The quality for a motivated seller generally will be okay because they are motivated to sell it, but sometimes it may not be. It could be complicated to get hold of a motivated seller if you are sitting here in Singapore or in Malaysia. But with a motivated seller, you may be able to get leverage, which means getting a mortgage. Realtors are very interested in you paying the highest price as the buyer because, put it simply, realtors get paid a percentage of the transaction. And by the way, the average commission for US realtors is 6%. I was quite shocked when I discovered that. I used to live in Hong Kong, as I mentioned before. And in Hong Kong, the average transaction, the commission is about 1%. So that's a big difference. So just something to keep in mind if you are going to buy from a realtor, the average commission is much higher. Likely, this is going to be a property, though, that is in completely move-in condition. So it's pretty easy to find. And as I said, likely fully rehab. You can also close later, and so you can rehab. Wholesalers, as I mentioned, wholesalers will be intermediaries, right? And they usually take a wholesaler fee. It's between $3,000 to $5,000, depending on. Basically, they will agree with the seller on a price, and they will propose it to their list on a different price, which is higher. Not necessarily a lot of competition. Very often, the properties that come to you through a wholesaler will require work for you to resell it, generally. And very often as well, they will tell you how much work it requires. You will see the offer. I will show you a little bit later when we talk about finding the deals. You will see something like, after repair value this much and rehab cost estimated at this much. They will tell you. Depending on the time, there's good inventory or not. It can be easy to acquire the property, but there will be work that needs to be done later. So just something to think about. And you might be able to leverage with wholesaler, but generally the wholesalers expect you to pay right away. So you may, if you have already a mortgage arranged, you might be able to pull on it quickly, but generally it's quite difficult. Foreclosure auctions, the bank ones, the bank is usually looking for the highest price, right? And I'm gonna lump those two together. Foreclosure auction and bank real estate owns, because they're generally together. There are times where the bank will put it on the market through a realtor in the normal way. It's usually reasonable conditions, but that depends, right? There may be inventory depending on what's been going on in the market. At the moment, in the case of bank real estate owned for the moment, not so good. because there has been pretty much an 18-month moratorium on repossession. It's starting again right now, but it's been slow, and the banks were not allowed to repossess any properties because of COVID, unless they could show that the person was in bad faith. Right, so they just let it be. You can leverage those properties, but it's not so easy. I'll talk about this a little bit more later, because there are some aspects of that we're not that fond about. Right? What we do love is government tax auctions. And I'm going to explain to you exactly what a government tax auction means. But the government tax auction can allow us to acquire property at very, very low prices, unless there's a lot of competition. But this is where it is really important to do your homework. And that's what we are here for. And that's what I'm going to explain to you through the day, how we do the homework, how we make sure the quality is there or the lack of quality. We want to make sure that we know what we are getting into before we buy these properties. All right. So as I said before, they may or may not be inventory. It depends on the markets. Right. It can be a bit complex as a foreigner to join a government tax auction. And very important to remember, you cannot use leverage. When you win a property at government tax auction, the government expects you to pay within 24 hours or less. There are some government tax auction, for instance, there are some government tax auction in Texas, for instance, which are in person, where they literally expect you to come to the front if you win the auction, sign the check right now, hand over the money. So something to think about. And it doesn't matter who you buy from. What really matters is how much total cash you need to pay and what the fair market value is. All right, so let me explain in more detail about tax deed property auctions. They are one of our favorite ways to get properties for flipping. And it's related to, of course, the tax system in the US. The US, as I said before, has 50 states in it. And not just 50 states, the US actually also has over 3,000 counties. All right, so you need to keep that in mind, because the counties is what is important to us right now. The county pays for every local government, services. The road work, the hospitals, the firemen, the schools, police. And if there is an airport on the county land, also the airport. And the way the county actually finances that is via the property tax. If you own land in this county, you are liable to pay tax, whether it's agricultural land, whether there's a house on it, whether there's a mobile home on it, you always have to pay property tax. And the property tax is on average between 1 to 2% of the value that the county government assigns to your property. It's called the assessed value. All right, so this is how it works. Every year, the county government sends a demand for tax, they receive the money, and then they pay for the local services. So far, so good, right? It's simple. And of course, the county government knows, well, I have this many plots in my county, so I should be receiving this much, and this is what I can spend on all my local services. However, there's between 20 to 30% of property owners every year that cannot pay their tax. And there's several reasons for that. But the most important reasons, the biggest reasons is, first, the owner is dead. The county government still wants their money, so they still send a demand to the owner for the property tax. But of course, the owner being dead is not really able to open their mailbox and say, oh, I'll send a check. So that's one of the main reasons why property tax goes unpaid. The second reason is in the case of divorce. Very often what happens is that both parties go, well, I'm not paying the property tax because I'm not sure if I'm keeping the house. This can lead to problems after a couple of years. And the third reason is, unfortunately, if the owner has lost their jobs, they may not pay the property tax because they are much more focused on putting food on the table and keeping a roof over their heads. And that will be okay for a couple of years. But after a couple of years, this may come back and bite them in the butt, if I can use that expression. But in the meantime, I'm the county government and I'm missing money, right? So the first year, homeowner A did not pay the $2,000 in property tax. And that means that I have a hole in my budget for that amount. But I still have to pay the local services. And I cannot very well go to the fireman and say, well, homeowner A did not pay the property tax today, this year, so you're going to put out fires for free. That doesn't quite work, does it? So what are my options? Well, one of the options that exist in the tax laws in the US is for me to go to investors and ask them if they will pay for the property tax. So if I go to Mr. Noor and say, Mr. Noor, Mr. Alex here did not pay for his property tax. Would you like to pay for Mr. Alex's property tax? Would you like to pay for it, Mr. Noor? Any option? What do you mean by any option? I'm just asking you if you would like to put in $2,000 to pay right now.
If I have the fund.
If you have the funds, yes, of course. Okay, but if I say, okay, so you give me $2,000 for 1 year, and in 1 year we return $2,000 for you, is it worth it?
Should be more than that. It shouldn't be 2,000, right?
Exactly. So you're not going to do it for free, which is normal because you're an investor, right? So for instance, if I ask you, Mr. Noor, okay, it's $2,000 and the interest rate is 16%. Would you like to finance it now?
Of course.
Yes. Okay.
Of course.
So Mr. Noor gets a piece of paper that says homeowner A owes him $2,000 plus 16% at the end of the first year. That's a good return, isn't it?
Yes.
Yeah. Okay. So, but here's what happens. Year two, Mr. A, homeowner A, still is not paying, is still unable to pay. So I, the county, go back to Mr. Noor and say, Mr. Noor, would you like to loan another $2,000 for another 16%? And of course, your original 2,000 will also compound the 16% over the second year. Are you still in?
Yeah.
Okay, great, wonderful. Thank you. So, I can pay for the firemen. Okay, then we get to year three and homeowner A still hasn't paid. And now, by the end of that time, homeowner A owes the county as much as $10,000 between the penalties, the 16%, right? And the legal fees and me sending out papers to homeowner A, he owes at least $10,000. So now I'm thinking, I'm the county, remember? I'm thinking, well, now we owe Mr. Noor $4,000 plus, plus, plus. How do I get that money to pay Mr. Noor? Because obviously homeowner A is not going to do it. So there's different options depending on the county. In some county, at the end of that time, I might say to Mr. Noor, okay, Mr. Noor, this is the ownership paper for the company. I am the property. I am giving you the property. And Mr. Noor is very happy because he suddenly owns the property that he paid the tax for. This happens in some counties, less and less, but it does happen. However, generally what happens is this. I am the county. I'm going to take the property from homeowner A. And I say, well, you owe me $10,000. So now I'm taking your property to pay Mr. Noor and to pay myself. But now I have a home. I have a house, right? And oh, by the way, we happen to know that this house is worth $180,000. How much is this house worth? $180,000. Keep that in mind. It's really important. So I'm sorry, Mr. Alex, your property has been foreclosed on right now. And it is worth $180,000. I'm sure there are some very good reasons why Mr. Alex couldn't pay his property tax. So now I need the cash to pay Mr. Noor back, as well as to pay for everything else, right? So I'm going to put this property for auction. I'm going to put the property at auction. And the starting bid is $10,000 because that's what I'm trying to recover. Does that make sense? Are you with me so far? Give me a thumbs up if you're with me. All right. Thank you very much. Thank you, Miss Kara. Thank you, Mr. Noor. Thank you, Miss Linda. All right. So the minimum bid is $10,000. Who would like to bid on this property? And how much?
20,000.
Mr. Noor, 20,000. Okay, you're good. Okay, that's a good start. All right. Miss Linda, 30,000. Miss Linda knows something that it's worth $180,000. Mr. Brandon, Miss Cha, is there anybody that would like to?
35.
35. Oh, Mr. Noor is definitely committed to getting that property. 35. Miss Doris, 6,000? Or is that Miss? Oh, 36. All right. Thank you very much, Miss Doris. 36,000.
40.
40 from Mr. Noor. All right. 40 from Mr. Noor. Do I have any more bids? Do I have any bids above? Oh, Miss Linda, 45,000. All right. 45,000 for Mr. Linda. Mr. Noor, would you like to bid over 45,000? You know the
65.
65? Oh my God, that's a big jump. All right. Sold to Mr. Noor for $65,000.
Thank you.
Thank you. So my paper says the auction winner here was 50, but that's okay. We'll take 65. Okay. So Mr. Noor won the 65,000, right? And oh, by the way, since Mr. Noor also owns the lien, he will be reimbursed for the lien as well. But of course, he acquired this property for $65,000. It's valued at $185,000. Is it possible that this property is going to be absolutely amazing looking and he can sell it right away? Is it possible? Yes, it is. It does happen. Rarely, but it does happen. In general, this is a property that will need some repair work before it is put on the market. And we will talk about that much longer later on. Right. So I'm the county. I received $65,000 from Mr. Noor. All I need is $10,000, right? Remember, because that's what is being owed. where is the rest of the money going? The rest of the money will either go back to Mr. Alex or to his creditors. So for instance, what happens if Mr. Alex had a mortgage on this property? Did Mr. Noor end up with the mortgage? No, the mortgage is null and void. The mortgage is gone, right? So Mr. Noor, that's the only thing he pays. He pays 65,000 and he owns the property outright. Mr. Alex may still be owing money to the bank, but that's between Mr. Alex and him, unfortunately, right? And the bank. So the balance, the $55,000 extra, will go back to, as I said before, Mr. Alex or his creditors, depending on what situation he is in. Does that make sense? Are you following me so far?
Yes.
Thank you, Mr. Noor. Thank you, Ms. Kara. All right. So I want to share with you a video of one of the auctions. This auction actually happened last year in February 2020. And we were in Manila and we were bidding on some properties that were based in for investors. We were bidding on behalf of investors that were based in Cambodia and in Jakarta and in Singapore. And this specific auction was in Jacksonville, Florida. We were based in Manila, bidding online in Jacksonville, Florida for some properties. So far, so good. So I want to share this quick video with you.
$35,100, made a hybrid. Yeah, and buy my okay. Something today. Come on. Come on. TikTok. 10 seconds. Come on. So close. 355. Fantastic. Fantastic lah. Fumble lah. Please fumble lah. Don't. Okay lah. Bergerak. Sorry. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Got it. Yeah. Good job. Take another.
12, 10, 8.
All right, so you could see also, you could hear that it was done at 12:30 a.m. So in the middle of the night, of course. And, oops, sorry. Okay, and you might be able to see this picture. It's not very big, but this picture right here, this is the property that we actually acquired for $36,100. And at the time of the purchase, this property was worth $105,000. At this time now, this property is worth about $125,000 to $135,000, and it's about to enter a renovation phase. There was a delay because there was, of course, we had the COVID related moratorium and there were tenants in the area, so it took a bit longer than expected. And Pak Julius Wijaya is actually one of the investors, and his own capital invested was $30,000 in this specific property. All right, at this stage, I would actually like to give you about a 10 minutes break. And then we will reconvene. We will come back at 11:05. I want to make sure that I cover everything, and we'll just meet again in 7 minutes, actually, at 11:05.
Thank you, Veronique. You come back. 11:05. Thanks.
Thank you, Mr. Noor. Okay, welcome back. Welcome back. I hope you got yourself hydrated and get your brain ready to do a little bit of work. Now it's going to get a bit more interactive, so please remember to use your reaction button and as well as use the chat box so that we can interact, because I will have a few questions for you. So it's always better if you actually participate. Thank you very much, Mr. Advent, and thank you for joining us. Mr. or Miss, sorry, if it's if I have the wrong title, please, remember I'm a foreigner, so feel free to drop in the box if I address you with the wrong letter, the wrong name. All right, so let's talk about, let's talk about why we invest. Right, so I mentioned before at the very beginning of this that one of the reasons why Ralph became interested in investing in US real estate is because he wanted to make money work for him as opposed to him working for money. Right, so that's one of the reasons why we invest. So let me ask you, what are some of the reasons that you want to invest? Because you want some cash flow to come into your wallet. Yes, that's a really good reason. What are we going to use the cash flow for? So a lot of people have different ones. I hear, oh, because I want to retire early, for instance, that's a really good reason. Because I want my children to go to any university they choose to. That's another really good reason. Or because I want passive income to fulfill your bucket list. Yes, that's a really good reason as well. Miss Linda, thank you for sharing. What are the other reasons why we decide to become an investor? Well, one of the big reasons, of course, I hear about is retirement, right? Because people want to retire and they want to make sure that they have funds when they retire, right? Passive income is absolutely great for retirement. Yes, I agree with you, Doris. That's definitely something that is important. The other thing is some people invest to pass money on to their children. That's another option. Right? Different things and different reasons, but just ask yourself, what are some of the goals that you have for your investments? You don't have to share it, but it is important for you to know, because if you do not have a long-term goal in mind for your type of investment, or several. So for instance, for me, it's retirement and to finance my son's studies. Right, so that's twofold. If we don't know why we do it, it becomes very easy to dip into these investments for something. So, for instance, say you save $10,000 as an investment, and you want a new car. the old car works just fine, right? But you want a new car. And maybe you think, oh, well, you know, my goal is, it doesn't really matter. I can use that money for the new car. It's possible, but then that's not long-term saving either, right? Mr. Brandon, I so agree with you. To travel once more, once borders are open. Yes, discovering the world. There's always more world to discover. I agree with you. Mr. Noor, business. Do you mean you want to invest for more? You want to invest to grow more businesses? And that's certainly one of the investments that you can have. I completely agree with you. So let me move forward a little bit with some other things, right? Let's go with, okay, we know where we invest. Let's talk about compounding. I don't know about you, but I love compounding. And compound interest, as Albert Einstein says, he who understands it earns it. He who does not pays it. And what that means is that if you do not understand compounding, you end up being one of the source of funds for someone else. Yeah? Have you seen that before? Is that something that you can think of? Okay, so yes, thank you very much, Mr. Advent. Yes, and Mr. No, buying more properties is a great way to make a business. Yes, it is one of the ways you can have it as a business. So I have a couple of stories for you about compounding. So are you ready for that? You might want to have a piece of paper as well, just for your following. We have twins. They're called William and James. And William and James are retiring today. 28th of November is their retirement day. They're both 65, of course, they're twins, right? And William started investing very early in his life. Between the age of 20 to 40, William invested $4,000 a year. So that's a total of $80,000 that William invested between 20 to 40. So far, so good. James had fun, he traveled, blah, blah, blah. So he didn't really save any money until he turned 40. And at 40, he started investing the same amount as his brother had, $4,000 a year. Until today, his retirement day, 65. So James invested a total of $100,000, right? Remember, William invested $80,000 from 20 to 40. So he stopped 25 years ago. And James invested $100,000 from 40 to 65. And he stopped. He's stopping today. Those funds earn 10% per annum. It's a good return. Well, there were some times where it was a low return, but on average, 10% per annum is a good return. So I have a couple of questions for you. The first one is, who has more money right now?
The first twin.
The first brother? William. Thank you, Mr. Noor. Yes. William has more money. Absolutely. Now, here's the next question. How much more money does William have? Well, the closest answer I can come up with that is a lot. And I know it sounds funny, but that's really this. Mr. Noor, thank you, Mr. Noor. Mr. William has nearly $2.5 million. But James only has $400,000.
But both enough for retirement, right?
400. 400
retirement.
it depends where you retire, Mr. Noor.
Yes, of course, yes.
Yeah. And my question to you, of course, is who's paying for retirement dinner? And who's paying for all the dinners in the next few years? Most likely William. But then it won't be, it shouldn't be a challenge. But that is one of the brilliance of compound interest. And of course, helping our youngsters understand the brilliance of compound interest is where the problem is, right? Because when you're 20, you don't necessarily want to save this kind of money for retirement. When you're 20, you want the flashy car, you want the good travel and all of that. So this is where it's important to really think about creating a balance. So let me show you a couple more examples of compounding that are important. If you had right now $50,000 that you want to invest and you put them in the bank here in, well, maybe not in Singapore, but you put it in the bank and those $50,000 make you 3%. In 10 years, you will have, oops, that's not very legible. In 10 years, with 3%, you will have $67,000. That's not a nice, very good return, right? But it's only 3% and it's safe, it's in the bank. If you find an investment that makes you 20%, you will have $309,000. Now that starts to be a little bit better. If you make 30% per annum, you will have nearly $700,000. And if you were able to make 45% per annum for 10 years, you will have over $2 million. And the reason why we chose those numbers in particular, especially for the 30% and the 45%, is that when we prepare a flip, when we target a flip for our clients, the minimum return target is 30%. But last year, we actually earned over 45% on average for our clients on our flips. That's why those two numbers are here. But this is the difference. And this is where you can make a huge difference for yourself if you leave the money in. Because it's also very tempting to pull money out. But when you pull money out, then you end up losing on the compound, on this compounded interest. And this is where the money really grows. Does that make sense? Give me a thumbs up if what I'm explaining makes sense to you. All right. Thank you, Mr. Noor. Thank you, Miss Kara. Thank you, Miss Linda. All right. So thank you, Mr. Advent. So there are lots of different types of investments you could have. I'm going to talk you through a few, and there's a lot others as well, but we kind of have to stick to something. Right? So for instance, you could have your money in the bank in a fixed deposit. If you have a lot of money in the bank may say, oh, Mr. Noor, I noticed you have $10,000, you should put it in a fixed deposit. It will make you more money. What it means is for the fixed term, say 6 months or 1 year, or even 2 or 3 years, your money is stuck there. And then you will receive an interest. So I was curious and I went and looked at what sort of fixed deposit rate you could get. As I said before, I used to live in Hong Kong, and in Hong Kong, a fixed deposit in US dollars was very small and definitely under 1%. So not great, right? And I wanted more. So yes, fixed deposit rates are very, very small. So you have to think about, okay, well, what else could I get? So I looked it up. In Singapore, the average fixed deposit rate from the bank is 0.05% right now. That's definitely not enough. In Malaysia, it's about 3%. In Indonesia, where I am right now. I could walk into my bank and say, I have $10,000. Can you give me an interest rate? And it'll be about 5% for a year. Most likely, I'd have to have it in. In Indonesian rupiah as well. So I'm taking the currency risk as well, right? In the US, on average, it is around 1%. So that's the kind of return you could get on fixed deposit. But of course, fixed deposit is very, very safe. I'll put that in bracket, as long as your bank is still here, right? And it's very safe, but it might not cover something new-ish or that's come back into our life, which is inflation. I can assure you that inflation in Indonesia is higher than 5%, and I'm pretty sure it's most people. So that's the first one, fixed deposit. That's simple, and that's the simplest way to put your money in an investment. Let's look at other possibilities. So the second one, which I'm very fond of because that's my background, is mutual funds. Now, mutual funds means pretty much everything under the sun. You could have mutual funds for equity, which is stocks, right? You can have mutual funds for fixed income, which is fixed deposits. You can have money market funds. You can have balance funds. You could have funds for real estate as well. They're called REITs, right? So there's a lot of different types of funds. So all I want to say with that is do your research. If you're going to be investing in funds, you really need to check what the funds are invested in, what sort of return they've had in the past, knowing that, of course, past returns is not a guarantee for future return, and who's managing the funds. Some people are better managers than others. Well, hopefully, Mr. Noor, if the bank is proposing a mutual fund to you, it would be legit. But yes, legit is something to look at. You make sure that the fund managers are registered. In Hong Kong, it's the Securities and Futures Commission. In Singapore, it's MAS. In the US, it's the Security and Exchange Commission, right? Different places. That's an important one to look at, especially in the case of mutual funds. And that includes mutual funds that will invest in hard assets, gold. For instance, gold is an example, but that there's all sorts of funds. About 20 years ago, I think, maybe it's 25 now, but about 20 years ago or 25 years ago, one thing that became very, very popular were hedge funds. Maybe anybody heard that phrase? Yeah, hedge funds. So hedge funds, really what it meant at the time was a license for the manager to do whatever they wanted in the fund. And that's another thing that you do need to look at, the manager and how they do it. So I found, as a fund manager, I found that a lot of hedge funds, basically, it just meant you gave this money and your trust to this person to do the best. So that, for me, that did not sit very well, but that's just a personal thing. It didn't feel safe, Mr. Noor. That said, I had some very good friends that were excellent hedge fund managers. And as we said before, right, past performance is not a guarantee of future performance. So what I want to say with this is do your homework, research. And basically, that's all this is about all day today is research. Do your homework. Right. So mutual fund has one good thing is once you've done your homework and you have some very well-known and very large fund management houses, such as BlackRock is one of the most famous ones. The company I work with is quite well known in France, for that matter. In Singapore, one company that got started in Singapore that became very famous was Aberdeen Trust. Right. You have all the banks, all the big banks have fund management houses as well. So once you've chosen one and you've chosen it, it's usually pretty good. You could stick to that, and that will give you access to more variety. So you will be able to diversify your investment under one line. And you don't have to ask yourself, well, is it better for me to own DBS or CBC? But if you enjoy stocks and being in stocks yourself, you could be the one that makes that decision. Do I own DBS or do I own OCBC? That's a possibility as well. So you could be owning the stocks yourself. By stocks, what we mean is a portion of a company, right? A listed company. If it's a stock, that means that this company is available for you to buy directly on the stock exchange. So that's an option. Same thing, due diligence is very important with that. Stocks were what I used to buy as a fund manager. So I would be responsible for making the choices. Is it, as I said before, better to own OCBC or DBS, for instance? Next, and I'm going to lump these ones all together. I could spend hours explaining the differences to you, but I really don't think that this is the purpose of this today. Are options, futures, derivatives, and cryptocurrencies. There are plenty of courses out there. There are plenty of people out there selling you courses on how to trade all of this. And usually it goes with, you need to look at the charts, and when it hits this much, you should buy. When it hits that much, you should buy, blah, blah, sell, blah, 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 blah. All I have to say about all these categories is that they require a lot of time and attention. I have friends that are future traders or options traders, and generally these are done in US market. They spend their night in front of their screens. It requires a lot of work on your part. You can be very good at it. That is entirely true. But it really requires work, and it requires watching. That makes sense? Before crypto was even a thing, right? There was derivatives and options, and we had horror stories of people going away on holiday and they come back and the portfolio is decimated. It needs watching. You cannot leave open positions without you keeping an eye on it. With crypto, we actually have a client of ours who had very successful crypto investments. And then there was one day where he basically did not look at his phone for 2 hours, and he lost pretty much 80% of his investments in those 2 hours that he had dinner with his family. So it's possible. It needs to be done with caution. It needs to be done on a relatively small part of your portfolio, and it needs to be watched. Does that make sense? So they don't really qualify as what I would call passive investments in general, unless you give your money to somebody else to manage in that area. That brings me to one of our topics for today, which is real estate. As Mr. Noor said, property is tangible. Real estate is solid. You have land, you have a house on it. I sometimes hear people saying to me, I have investments in real estate. I own shares in a REIT. So for those of you that do not know, a REIT is a real estate investment trust. And you buy and sell those shares in the stock market. It's still a piece of paper that represents a solid asset. One of the reasons why we like real estate is that it is a solid asset. It still requires management, but it's a real asset. And worst case scenario, you can keep the land and sell it later. There's always value to it. Does that make sense? And you can actually build a complete passive income machine. Thank you, Miss Linda. Thank you, Mr. Noor, Miss Kara. You can build a passive income machine with real estate. Last but not least, and I'm sure you could think of many other types of investments, but I'm going to touch on business dividends. Some people are very lucky and they have a friend that comes to them and says, I have this business idea. Would you like to invest in it? And the business idea is extremely successful and they get dividends every year. That's a great way to make money. And that's a great way to become wealthy. And what's the number about that? I think about 20% of 20% of companies are left after 5 years of business. So there's a risk to it. But if you choose the right one, this is also a great way to make money and to make money regularly. In fact, we had a gentleman a few months ago that was an investor in such a company. And he said to me, you know, I earn about 25% every year. I don't have to do anything. So that makes sense, doesn't it? So something to think about. All right. Next, let's talk about those expectations. Now, I would like you to, now that I've given you a list of potential investments, and you may have others, by the way, but I'm going to give you a few minutes to actually do a little bit of homework. So grab a piece of paper and draw a line in the middle, right? Draw a line in the middle. And on the left-hand side, you're going to write current. And I'm doing it with you as well. And on the other side, you're going to write desired. And right now, all I am, just like that, not very elegant. Mr. Noor, for some reason, you're writing on my form, which is a little bit strange.
It's okay. I delete it. I will erase it. Thanks.
Yes, I don't even know how to do that. I might have to learn from you how to do that. But thank you very much. Maybe you can do it on your piece of paper and share with us.
You go to view options and there's a lot of. I can do it later.
Okay.
Let's go to view options. There's a view option on top.
All right. So okay. All right. So that may become a little bit messy if other people do it at the same time as well. All right, thank you. So if you go and do this, basically what I'm asking for you to do right now on the left-hand side, under current, right? Under current, I would like to ask you to actually write a list of what you have that is making you returns. So it may be, for instance, fixed deposit, 2%. Investment in a property, 5%. This, that, the other. Just make the list for yourself. I'm not going to ask you to share it publicly, but what I would like you to look at is what the list is and what your estimate of your current returns are. That's the one number that I'm interested in right now. So I'm going to give you 2 minutes with a bit of music for you to do. Right. Okay. So please share with me what sort of number you have come up with, which is kind of your yearly return at the moment. So I know Mr. Noor wrote 5%. We saw it. Anything else that you want to share with us? Now would be a great time. You could put it in the chat box. And in the meantime, let me share a couple of stories. While you're typing in the chat box. We were in Vietnam, and a lot of the returns that our Vietnamese team, when they put up their form here in current, they had 100% or even 200%. And so we kind of had to ask them, we had to ask them, well, how do you achieve this amount? And they said, well, we had property and there was a Chinese developer that wanted to build something. So they offered us a lot of money for our land, and we made over 100%. So that was the next question. Can you do that again? Oh, no more land. So it's not just about what you have achieved in the past, but it's also, is it sustainable and repeatable? Can this be done again? So same thing as this gentleman that I was talking about that had 25% coming in from his friend's company. Can it be repeated? Well, he can invest in other companies. Will he do as well? Maybe, maybe not. So that's something to think about. What is repeatable, sustainable, and what can be happy, what you can do again and again and again. And that's what we are focusing on for this. Does that make sense? Yes? All right, so that leads me to, does anybody want to share their current returns and their desired return if you were to invest in US real estate? Miss Linda, 77% current, that's pretty good. 20% desired, yes, and that's pretty good too. And that would be great. Okay, thank you for sharing, Miss Linda. Anybody else want to share? Nobody else want to share? We won't bite. We're nice people. Okay, Miss Kara, 20% current, 30%. Oh, wow. Mr. Noor, 10 and 15, very nice. And Miss Doris, 10% current, 30% desired. All right, thank you. Okay, so when you look at how much, okay, Mr. Advent, can you explain 50-50? What does that mean? Mr. Brandon, 5% current, 20% desired. Yes, very achievable. And that's a very healthy number. If you could do 20% per annum for the next 10 years, you would be doing very, very well. So, Mr. Advent, do you mean that you're currently earning 50% and that's what you would like in US real estate? Or is that something else that I'm missing? And feel free to unmute yourself if you prefer. So to finish my story about the 100% for our Vietnamese investors, they thought that if they were going to invest in the US real estate, they wanted a minimum of 150%. But then it's the same thing. We had to discuss with them whether it was sustainable and repeatable. Right? And of course, land in the US is a lot easier to come by than it might be in just in the close suburb. All right. Mr. Biden will not allow what? $150%? I would guess so. But you know, take the land. No, that's not the way they're going to do it. All right. Okay. So hopefully Mr. Advent will let us know what he meant later. But in the meantime, let me move on to the next section because I want to make sure that I give you a nice lunch break before we go and dig into the research. So let's talk about business structures. And let's talk about why it is important to have the right business structures. So you may remember from the beginning of this presentation when I said that Ralph paid $20,000 for his first class on US real estate. And he paid $20,000 because it also included lifetime coaching. But then what he realized very early on was that lifetime coaching, it was working for US tax resident, but it was not necessarily appropriate for a foreign tax resident. So Ralph actually had to go and seek the advice of a US tax attorney to really understand how to have the right business structure in the US. The right business structure will allow you to lessen your tax to the smallest amounts possible, as well as lessen your liability, which is very important in the US because the US, unfortunately, is quite, how would you put this nicely? lawsuit happy place. So there are two types of business structures that you need to know of if you're going to be investing in US real estate. The first one is the simple one. It's called the C Corp. And this is the type of structure that we know. It's similar to a PT Limited, SDN Berhad, or a PT in Indonesia, or a limited in Hong Kong. It's just a normal company, right? And this is the structure that is easy to form, but a little bit more cumbersome to manage. This is the best structure if you're going to be flipping. So buy, fix, sell, or if you're just going to buy real estate and sell it. For short term, this will be the best structure. One of the important things that you need to know about both ways actually is when you invest in US real estate, one of the things that we do is we use debt to finance the corporation. What this means is your investment, say Mr. Noor comes in and invests $50,000 in flipping, he will loan $50,000 to his own company. It's a very important way to reduce the tax. So we will have loan documents between him and his own company. When it is time for the investor to take all their profits, we will dissolve the corporation. It's very important to understand that. If you don't dissolve the corporation, you pay more tax. So the way to pay the least tax possible is to dissolve the corporation. So when you want to take all your money out, this is going to be done. As I said before, it requires a bit more corporate compliance. And a C Corp will have shareholders and it will have directors. The power is with the shareholders. Right? The directors will be you as well as at least one person from Noble Sky, because Noble Sky needs to be able to operate on your behalf so that it is completely passive on your front. But you are the ultimate owner of the assets. Does that make sense? You follow me so far? All right.
Yes.
Thank you.
Yes.
Sorry.
Thank you.
Thank you, Mr. Noor. All right. There's a second business structure which is not as well known unless you've looked at the US, and it's called the LLC. It's a limited liability company, and it holds your liability at the level of that company, but all tax and profits will go to the ultimate owner, whether it is a C Corp or whether it is the person. That actually has some substantial tax advantages, for instance, in the case of rental. And I will explain that in more detail later. For long-term real estate, it is better to have it as a LLC. And one of the reasons is that the real estate, whether it's all long-term or short-term, is not treated the same way. Excuse me. So short-term real estate will be considered a stock as opposed to an asset. It won't be in the same category for accounting purposes. Okay, so as I said before, LLC is a flow-through entity, and it will hold the title to the property. Okay, it's usually the C Corp will own the LLC. LLC is done this way. You have members that own the LLC, and you have managers that run the LLC. So say in the case of Mr. Brandon owns the LLC and the manager is someone from Noble Sky. They're very simple structures. And every time we purchase a property in any state for any shareholder, we will form one LLC in that state that will own the property. We will also form one LLC per property, even if it's in the same state. And the reason for that is to protect you from liability. So the example that we use is a simple one, but unfortunately, the US is a lawsuit-friendly country, right? So suppose somebody walked through your front yard, because generally front yards are not enclosed in the US, puts their foot in a hole and breaks their leg. This person may be entitled to suing the LLC, to suing you for damages. So you need to be very careful that you limit the liability. If your LLC has more than one property under the same LLC, they could sue you for way more. So you want to be protected. And that's one of the reasons why it's one LLC, one property. Make sense? Noble Sky takes care of all of that, right? It's not something that you have to worry about. We take care of all of that. That is part of the service. Thank you, Mr. Brandon. Mr. Brandon likes the fact that his liability is protected. All right. When we formed the original companies, the entry-level holding companies, we always form them in Wyoming State. So I often have questions from the people I talk to, which is why Wyoming? Why can we do Delaware? Everybody knows about Delaware. How many of you have heard about Delaware? Only me? Okay, Miss Kara, thank you. Delaware is the most famous place to form a free company, but it's not necessarily the easiest or the best for when you are just doing a single investment. If you are starting, if you're doing a startup, you're doing fundraising, you are planning on listing the company on the stock market, Delaware is better. But Wyoming is great for simple companies, one owner or family owner, not too many, not listed. And it's much cheaper. It's both easy and cheap. So for us, Wyoming is the better choice for our investors. It's easy to do business. It's really simple to create a new company. There are strong privacy laws, which means, of course, your assets are safe. Very low cost business expenses and tax on returns. And very important, that's Delaware is the same, no state income tax. So yes, you will still pay income tax, but only federal, not the local. Make sense? Yes? So that's one of the reasons why we choose Wyoming State. Here are some of the really important best practices, and I already talked about this a little bit. So very important, keep that in mind. Always form LLCs in the state you buy the real estate in. So that means that if I buy one property in New York State, one property in South Carolina, one in Florida, and one in Texas, I will have a minimum of 4 LLCs. But if I actually buy 3 properties in Texas, one for renting, one for Airbnb, and one for flipping, I will also have 3 LLCs, all in Texas. So it's a very important best practice. And it's not just as a foreign investor, even US investors should do it the same. It's also extremely important that you separate your flipping business and your rental business because the tax treatment of them is different. Okay, so next, let's talk about leverage, conventional or not. So I shared earlier with you about banks and bank-owned real estate. In general, bank-owned real estate comes from the fact that the bank extended a loan, a mortgage to a property owner. But the property owner, for any reason, suddenly was unable to pay for the mortgage. So the bank can repossess the property. You've heard that. It happens everywhere, right? It's not just in the US. If you do not pay the mortgage, the bank is entitled to taking the property from you. One of the things that we're not very fond of is the fact that even if you have faithfully paid for 15 years and suddenly find yourself unable to pay, the bank doesn't return anything. So the owner has paid 15 years, plus they lose the house. So we don't like purchasing from banks for that reason. What we prefer explaining to people, and what we prefer doing, is something that we call unconventional leverage, which could also be called co-investing. So you can co-invest with other investors that have the same target. So say Mr. Brandon and Miss Eunice decide that they're interested in investing $50,000 in a flip, for instance. Well, in that case, they will find themselves together for both $50,000 in a $100,000 flip, for instance. They are co-investing, right? And the agreed upon amount, of course, in that specific case is $50,000 each. When we sell the property, say the total investment was 100, just to make it simple. When we sell the property, 50% of the proceeds will go back to Mr. Brandon, and the other 50% will go to Miss Eunice. Simple, right? And of course, we appoint a neutral manager that will take care of the entire process. And this is how it works. So I want to show you on this little chart and make it a bit clearer for you. So let me share with you, we have our Singaporean couple that wants to invest. We have our Malaysian family, an Indonesian solo investor, and the rest of our investors. And first, we have to start their company in the state of Wyoming for specific purposes. So you remember we said that we will have a different company for rental and a different company for flipping. So our Singaporean couple wants to invest a total of $60,000, $30,000 for renting. So we start XYZ LLC for them, and $30,000 for flipping. So we have XYZ Inc. for them. Our Malaysian family wants to invest $150,000 in rental, QRT LLC. And our Indonesian solo investor wants to invest $500,000 in a flip, or several. And then we've got all our other investors that already have formed their C Corp and their LLC companies ready. So we start and we find a property in Texas, Jacksonville, Florida, sorry. And that's cost $180,000 total. So we go and we ask our Singaporean couple, are you interested in investing in this? And our Singaporean couple say, yeah, we're very interested. Let's go. So they put in their $30,000 and the rest of our investors put in the balance, which is $150,000. When the flip project is complete, and say this flip project is sold for $300,000, we will dissolve 123 LLC in Florida and return 16.67% of the funds to our Singaporean couple. And of course, all our other investors will receive the balance of the proceeds. Because our Singaporean couple is thinking long-term, they have already decided to reinvest these funds. So they will reinvest their proceeds into another property. Next,
Veronica, sorry.
Yes, Mr. Noor.
So they have not exited yet, right? They're still with the property or within, is it?
No, so let me go back.
Okay.
they purchased this property for $180,000, right? And it's owned by 123 LLC.
Yes.
When we exit the flip project, when the property is sold entirely, 123 LLC gets dissolved.
Okay.
And then the proceeds go back to XYZ Inc. and to the other Inc.
So it's not the LLC, it's the Inc., right?
The
It's
Inc.
the
is still
yes.
here.
All right. Okay.
Right? And then because they see long term, they decide to reinvest in another property.
I see.
So another LLC.
So the name remain LLC name or company?
No, the LLC
XYZ?
will be different.
Different. Okay. Yes.
Yeah.
So you can't rename or you can't stick to the same name for LLC?
Well, you could, but really every time the shareholding change, every time we sell a flip project, generally we will just dissolve the LLC. It is very simple.
Yes, thank you. Thank you for that. Thanks.
Yes. Okay, so that's just one way of doing it. Thank you, Mr. Noor, for getting clarification. And I will explain some more as well. All right, next. We find a project in Houston, Texas, and that's a rental. And we ask our Singaporean couple if they are interested in investing in the project in Houston. And they say, yes, we have $30,000 that we want to invest. So to go back and re-explain, the $30,000 that they want to invest in the project in Houston will be lent. It will be the subject of a loan agreement because between their company in Wyoming State and themselves, right? And then the $30,000 will be invested along with the balance from the other investors in 777 LLC, which will be based in Texas and will invest $170,000 in this rental in Houston, Texas. Every month, we will receive rental, and our Singaporean couple will receive 17.64% of the rental every month. And of course, the balance of our investors will be receiving the balance of the rental. Does that make sense? If after, say, 5 years, the majority of the owners decide to sell the rental, the same thing will happen. 777 will be dissolved, and the 17.64% of the proceeds will go back to our Singaporean couple, for instance. And of course, the balance will go back to our other investors. It's a majority decision. All right, next. We find our Malaysian family is interested in doing a solo rental. They don't want to share with anyone. They want to invest $150,000, and we found them a great rental property that is in Niagara, in New York State, for $150,000. So they own 100% of 888 LLC. And every month they will receive 100% of the rental. And when they're ready to sell, they will receive 100% of the proceeds from the sale. Next, our Indonesian solo investor wants to invest 500,000. So he would have the choice of investing, say, in two $250,000 properties, for instance. As it turned out, we actually found him a great flip in San Francisco. So he invests all of his $500,000 in the solo flip project in San Francisco, California. When the flip project is over and the property is sold, say for $800,000, 456 LLC will be dissolved entirely, and the entire amount will go back to ABC Inc. and be reinvested in another project, because he understands compounding. Does that make sense? Okay. So do you have any question? Thank you, Miss Linda. Do you have any question about this? Because I know this can be a little bit confusing for people. So now would be a great time to ask questions. Yes, Mr. Brandon, I find that it makes a big difference to see it in on the drawing.
Yeah. Veronica? Veronica?
Yes.
No, yeah.
Mr. Noor, you have a question?
Yeah, so on the investors part is just to deploy the funds, and
Yes.
and NSI just determine either flip, either whatever properties, yeah, right? Yeah, so
Noble
right.
Sky will do absolutely everything for the investor.
Including the legal
Yes, absolutely.
Yes.
All the investor has to do is decide whether they prefer rent or flip and send in the money and collect it as well at the end.
So must we open a foreign bank or US bank in US or
it's actually pretty difficult to do unless you already have one. So we deal with all of that from you with you. We take care of everything.
But I understand we are using TransferWise. Last time was called TransferWise.
Yeah.
So it's a Wise,
we still use Wise, and also we will use Mercury sometimes. And we just pay, for instance, for rental, we'll just pay the rental directly into the client's accounts.
I see. So it would be through Wise, the gateway.
Usually it can be through Wise, but if the client only has an account in their country, we will pay directly into this account.
So you can't transfer any US dollars to Singapore bank, right?
Yeah. Easy.
Yes?
Yeah,
yes?
No problem.
Okay. All right. Thank you very much. Thanks.
It's easy. Thank you, Mr. Noor. It's good to get clarification when you have questions. So any other question before I move to the next slide? All right. So if you have other questions, of course, I'll be happy to run through that. So let me talk to you about a number of the strategies. When we think about investing in real estate, all these come up online. If you look at investment strategies for real estate, you will find a number of strategies. So the first one that we discussed is wholesale, right? And wholesale is really, as I said before, you're the intermediary between somebody who wants to sell cash and somebody who wants to buy cash. Fix and flip. Fix means you buy, you repair, or you fix, and then you sell as quickly as possible, of course. Fix and rent, same thing, you buy, you repair, hopefully less repair, and you rent out. Of course, you want to rent out as quickly as possible as well, because you want the asset to make you money. Buy and hold is a possibility. I don't quite get the point, but you could be buying something. Owner finance is one strategy that is possible, where you could actually offer the financing for the buyer. If the buyer, for instance, does not qualify for a mortgage, it comes with risk, but it could be extremely advantageous for the person doing it. Short-term rentals, of course, everybody these days knows about Airbnb, and that can be a really nice way to make money. And I'll walk you through some of those numbers later. And of course, there is the very famous BRRRR technique, which is buy, rehab, rent, refinance, repeat. I'll explain a lot more in a minute. So these different approaches have pros and cons. So for instance, is it a complex strategy? Wholesale, very simple. Fix and flip can be complicated. It can be more complex. Fix and rent can be complex. Buy and hold, well, medium, low to medium, actually, because it's really not very complicated. But it might require some management if you want your property to stay in good condition. Owner finance, it's a medium to high, actually, because it does require watching. Short-term rental can be high, complicated strategy, but high return. And brrr can be a high strategy, complex as well. So going back to wholesale, the profitability of wholesale is pretty much capped. It's about 3,000 or 5,000. It's not complicated to manage, but because most wholesalers do not have companies, it can have tax consequences for people. So because it is literally treated like an additional revenue for the person doing it. So you need to be careful about that. Fix and flip, it can be complex, in particular for managing all the fixing, right? But it can be highly profitable if you do it right, but it requires management. Tax consequences, depending on how you structure it, can be medium to high. But it's a question of knowing how to do it and knowing how to structure it. So I always get the question from people about capital gains tax. And yes, there is a capital gains tax in the US. But if you are doing fix and flip regularly as a business and you reinvest your funds, you do not necessarily have to pay capital gains tax at that time. So it's really a question of how you manage the legal side and the tax side of this. So just things that you need to know so you can do it right. For fix and rent, right, same thing. It can be complex, but it can be very profitable if you buy cheap. Remember, we make money when we buy, not when we sell. Of course, there is some management, but the tax consequences of fixing and renting in particular, can be quite low. So just something to think about. Buy and hold, not necessarily the type of approach that we advocate, but it will work. And you may have low tax consequences. But remember, if you buy and hold the property and you don't live in there, you need to manage it, because a property that is left empty will deteriorate, and it can deteriorate quickly depending on the climate. And it's the same thing. An area that is very, very cold or an area that is very hot could deteriorate faster as well. So keep that in mind. Owner finance. What we mean by owner finance is, as the owner, you sell the property to someone that is going to pay you monthly to purchase the property of you. This can be quite profitable. And it means that you shift the onus of taking care of the property or doing all the repair work, the maintenance work, to the new owner. But you need to manage it carefully, because very often history shows that when you offer owner finance, a lot of people find themselves in the case where the new owner stops paying and they repossess the property. So it's something to think about. It's possible, but it requires to be watched. All right. Next, short-term rental. Well, short-term rental can be a bit complicated. In particular, it requires management. Every time somebody leaves the property, it needs to be cleaned, it needs to be fixed. We need to make sure everything is in good condition, but it can be extremely profitable. And because it is rental, the tax consequences are actually quite low. So it is a very, very good business to get in if you have the right people to manage it. Last but not least, the BRRRR approach. Buy, rehab, rent, refinance, repeat. It can be complicated, and it needs to be done over a long time. All right, so it will take some time, because here's how it works. You buy, you fix, so there's a few months, you rent out. After you rent out, you need the property to start generating income before you start doing anything else. Right? So that means that you need to wait a few months before you can refinance the property, which means go to a bank and get a mortgage on the property that is currently generating some income. With that money, guess what? You repeat, you do it all over again, and then again and again, right? There are low tax consequences to this, because the truth is, after you have paid back the mortgage every month, you might only make a small amount, but it allows you to build a long-term portfolio, and it allows you to build long-term wealth. Does that make sense? So it's not necessarily for earning money right now, but earning money in 10 years for sure. It's a great strategy. It's complicated to manage, but it's extremely profitable. One of the things that people know or not, which is that over the past two centuries, literally, 90% of millionaires in the world became millionaire via real estate, and pretty much through using a technique similar to Burr. So yeah, it is awesome, Mr. Advent. We really agree with that. All right. So now if you have any questions, now will be a great time for you to ask the question. And otherwise, I'm going to send you out to lunch. And please. Yes, Mr. Brendan. All right. So if you intend to start with investing $5,000 US, it's possible. And we would recommend for $5,000 that you start with a flip, because a flip will generate a minimum of 30% return. And not only do you start with a flip, but you stay in the flip at least 3, 4, 5 times. And your estimated return on the flip, the minimum return that we go for is 30%. And normally we target between 9 to 15 months for each flip. At the moment with COVID, it's been a little bit longer, but we are working very hard at shrinking that time back to under a year. And 6 months is really our target right now. Does that answer your question, Mr. Brendan? I'll leave the fund. Yes. Hang on a second, Mr. Noor. Just give me a second. Yes, if you fund $5,000 US, Mr. Brandon, yes, you leave the fund and you keep reinvesting. So say we do 30%, right? So 30% of 5,000. Well, okay, I'm just going to make it 40 just because it's easier. Say you have 7,000 after the first one, and then you reinvest your 7, then you get 30% of that. So say you have 9,000, and then the next investment you may end up with 12. That's how it will work. Reinvest, reinvest, reinvest. Entirely up to you, of course. Mr. Hassan, you have a question.
Yeah, it's a good idea as well to invest on Airbnb.
It's a great idea to invest in Airbnb. The returns will be a bit slower though. Our target is 15% for Airbnb.
So does that applies the same as, I mean, the returns the same? Or I mean, compared to rent, flip and rent or something?
It's usually the return for Airbnb will be a little bit higher, but there may be more maintenance, right? Because remember, we need to make sure that the properties are top notch. Mr. Brandon, for flips, I would target 4 years, just for safety's sake. So yeah, Mr. Noor, the other thing that you need to think about when you invest or with us in Airbnb is that even if it's an Airbnb, what we are looking for is a minimum 10 to 20% discount on the market value. So when it is time to sell it, you will also get that capital appreciation as well.
Plus principal?
Plus principal, yeah. That's what I mean. The capital appreciation will be on the principal.
Yes. So thank you very much, Veronique, for that.
You're welcome. And we'll see you after lunch, Mr. Noor.
Yeah, thanks. Bye.
Yeah. All right. Mr. Brendan, does that answer your question? Do you have any more? Well, you could start with rent, but if you're just going to start with 5,000 with a small amount, we recommend that you go with flip because it's a faster way. And it's entirely up to you. If you prefer rent, it's fine too. Mr. Advent, how much price rate for rehab or maintenance? So in general, if we go for Airbnb, we look for as little rehab as possible. So, you know, I'll show you a couple of examples later on. We look for as little rehab. So the property, really what we do is we furnish the property and it gets put on the market. And then for maintenance in general, for rental, what we say is you need to consider that 50% of your rental does not belong to you. But in our experience, it is closer to 30% than 50%. But we do need to have that sorted as well. I'll explain that more in after. So if you do not have any further question, we will see you back here at 1:15. There's a reason why this is a salad. Don't have a heavy lunch because we're going to be number crunching after lunch. So make sure that you are up and ready for that. 15%, Mr. Brendan, is our target return for Airbnb. So we will not purchase an Airbnb if we know we're not sure that we can generate at least a 15% return. Historically, it's been higher than that, but that's a minimum target that we have. All right. Okay. Well, if nobody else has extra question, Mr. Brendan, happy to answer more questions after lunch. Go and enjoy your lunch. Okay, Mr. Advent, we'll talk about that technique a bit later. And if I don't, please remind me, okay? All right. So enjoy your lunch and I will see you back here at 1:15. Thank you very much. Okay. Welcome back. Welcome back. Do tell me if you are back with a thumbs up. You remember how to do that. So thank you, Prasanjit. Thank you, Mr. Z. Thank you, Mr. Sakdev. Okay. Oh, great. Okay. So let's get started. We have a lot to do. So let's start with that. And I know, Mr. Sakdev, you already took care of that. If you haven't given us your Gmail email address right now, please do so. You can send a message directly to Daisy. You can see Daisy right here. Daisy, you can wave. And thank you. And Daisy is going to be our chat master for the afternoon. And she's also going to make sure that you have access to the research folders that we will be sharing later. So thank you very much, Daisy. And thank you, Zed, for being here and supporting the session this afternoon. If As I said before, if you didn't give us your Gmail access, please, Gmail address, please do so we can give access to you for the research file. And I noticed that we are missing quite a few people, so I would expect them to be showing back up very shortly. So let's get going anyway, and we will catch them up, because I have a lot that I want to tell you in the next 3 hours before I send you out to enjoy the rest of your Sunday. All right, as I said before, don't wait to buy real estate is wait. So we get the questions a lot, is how do you find the deals? And also, more importantly, not just how you find the deals, but how do you assess the deals? So that's exactly what we will be talking about today, right now. So there's different ways for us to find the deal. One of them will be, auction sites. And as well as wholesale Facebook groups. And we will look at property website. I'm going to show you a whole list of them very shortly, as well as Craigslist. So here are some of the auction sites. So you can, by the way, just by attending here, you actually can get access to the recording for this video, and you could always see that. But the other way, very simply, is to type the county in Google. You can Google search the county you want to be in. So say Duval County is one of our favorites, which is Jacksonville, Florida. Duval County tax auction, and it will take you to the same sites, just so you know, and you don't get stressed about writing every single one of those down. Other options, of course, could be wholesalers Facebook group. I'm going to show you one of them sometime soon. And when you do that, make sure you join a group that has a lot of members. The more members, the more opportunities. So you want to be looking for wholesaling houses, cash buyer, US real estate, this kind of names. And once you see a property that you think would be of interest, you can comment on the post, give them your email address, and that will allow you to go on their list, which means that when they have another opportunity, they may send you an email before they post it, in public. You can also use Craigslist, and Craigslist sounds a little bit old-fashioned, but with Craigslist, you need to make sure that you know where you are looking. So you must look for local markets. Some of the property sites that we use as well, Zillow.com, Trulia.com, Realtor.com, FSBO.com. We're looking at all of these. When we do the analysis, these are some of the sites that we will be using to see the information. It's really important when you do the analysis that you go and look for information such as, and I will show you exactly how it's done in a minute, such as things like population breakdown, how many families, the median income, all of that we need to know before we even decide to invest in a property. Here are some of the things that we're looking for. See that the slide, I went above this before the slides. Medium household income, percentage of ownership, percentage of white, population growth rate. Of course, we want a place that has high growth and high for population and jobs. Crime rate, because that will, of course, make a difference in the kind of people that want to show up in this neighborhood. School rates, right? And that's kind of what we're looking for. Before I switch to the other, to my other share, I would like to ask you to actually help us by giving us feedback on either Google or on Facebook, right? So you can go on this link, NSI Google review or NSI Facebook review, and give us a Facebook a review. Share one favorite lesson already, And that helps us, and that helps you as well, because you will get access to the special reports that Ralph wrote about 7 simple steps to start investing, as well as 17 research criteria. You will even get 3 property research that we've done in the past that you can look at just for your interest. Right, so remember to post a positive review and a favorite lesson, then let us know, and then you will get those downloads available to you immediately. All right, so this is where I change, bear with me for a second while I change screen. All right, oops, okay. Take that back. I need to open that file first. All right, now we can do it. All right, so as I was mentioning before, I actually wanted to share, this is one of the real estate cash buyer group on Facebook. This one has 43,000 members, and you could see in the discussion what is going to offer. So this person says, looking for cheap off-market rehabs. And then some properties are being offered, a signable contract, which means they're wholesalers, right? Or you get people looking for a cash buyer in Maryland. Some people, like this person says, you know, I have proposition, look for these places. So then you could say, yes, I'm interested, send me something. So for instance, off-market fix and flip opportunity in Ohio, 3-bed, 1-bath, 1,470 square feet. 33,000 offer, after repair value 150,000, needs full rehab. So you get on that list, you say I'm interested, you give your email address, and then you get a message and photos. Make sense? So that's how it works. So I wanted to show you this so you know where to do it. Thank you very much, Miss Linda, for the thumbs up. All right, now what I want to show you is the research, and we're actually going to do that all together. We sent you, or if we haven't yet, if you haven't submitted your Gmail address to us, please do, so we can give you access to the research template right now. Okay, and when you get access to the research template, this is what you will receive. It takes a bit of time to load, sorry. My internet is objects to doing this at the same time as the other thing. So what you will see in the research template is that we've actually kind of done everything for you. We've given you all the important links for you to follow as well. Okay, and today we're going to look at a tax deed auction, which will happen in Polk County. Polk County is in Florida, and it's the county that has Orlando in it. And of course, Orlando is famous for Disney World and Epcot and all these other groups, right? It's a great retirement area. So we're going to look at different houses over there, and we'll choose one to do all our research on. I wish I had more time to do more research, but unfortunately, we only have so much time for me to do the demo. So we'll just stick to one. Let me see if I can move this up a little bit, but apparently not. Okay, good. Now I have a bit more space. I need a bigger screen. All right. So the first thing that we do is that we will start by opening this link, right? And I gave you the link already, so you don't have to wonder about it. It's called Real Tax Deed, right? And this will direct you. And what you can see right here, this is the clerk of the court official tax deed sales, right? And you could see here, there's an auction calendar. This is our first protocol. Of course, we could register or anything, but right now we're just doing research, so we don't need to be known to anyone. And when we look at the auction calendar, you can see we're still in November. There was one in November, but of course, we're interested in the upcoming one. And the upcoming one is going to be on the 16th of December. And you could see here, it starts at 9:30 a.m. Eastern time. And the tax deed auction, there are 84 properties left out of 107 that were posted, right? So that's what those two numbers tell you. So we're going to click on this auction to open the page. And when you click on this auction, it always looks the same. When there is a running auction, so if I was to click on this auction on the 16th of December, after 9:30 Eastern time, you will see which one is being auctioned and the auction's waiting, right? And as you scroll down, hang on a second, let me just go left a little bit so you can see better, right? As you scroll down, you will see every property that is available for auction. And I would like to draw your attention to, you see, tax deed means the person did not pay the property tax. They have a case number. And here you will have opening bid. That's the minimum bid that they're looking for, the address for the property, and the assessed value. Now, the assessed value on these ones is very low, which tells me that it's most likely vacant land. So it's not the kind of things that we are looking for right now. What we are looking for is going to be single family homes. All right. So as I scroll down, I can see this one, for instance, the opening bid is 13,000 and it's got an assessed value of 226,000. So most likely this is a single family home, right? And as I keep scrolling, I can see this one as well, 29,000. And here, 321,000 as well, same thing. So this is probably a single family home. These ones are probably all just piece of land. Now, if I scroll further down, you see something here, auction status redeemed. So this tells me that the owner or someone else on behalf of the owner has actually put in the money to redeem to pay the tax. This can happen until the morning of. Until the morning of the 16th, the tax can be paid and then the property will be withdrawn. So in some ways, it's not necessarily useful to start doing this research very early, just because most likely half of those properties will be withdrawn. So you see, this one is a big one, right? And obviously the tax has been paid, so the property won't be sold. I hope that makes sense. All right, so let's go to the next page. Right here, you got 9 pages of properties currently on auction. So we're gonna go and scroll through and find a couple of properties that are a little that are available for us to look at. So let's see. So generally, remember, I'm looking for single family homes. So for instance, this one, let's see if it's got an assessed value of 27,000. Most likely, when I click on this, I might find that it is a mobile home. So just out of curiosity, let's do this. Okay, 900 Carver Street. Obviously a piece of land, not in the subdivision. And when you scroll down, you see building, mobile home, manufactured home. So why do you think we're not interested in a mobile home? Anybody have an idea? Why are we not interested in mobile home?
Can be shifted, right? The house.
Mr. Noor, you want to tell us?
Yeah, will that be mobile, meaning it can be moved around or?
Hold on, I lost audio. Give me a second. I know what's going on. No, I can hear you. Go ahead. Sorry about that. It's not permanent. Yes, Miss Linda, that's exactly what it is. The word mobile is a really good hint that we don't want to buy this, because most likely by the time we take possession, that mobile home will no longer be there. So not for us. We want something that is solid and that is still there. Even if we have to spend money to fix it. Okay, so let's check this one because I like the assessed value of 130. All right, so scrolling down. Motel. Oh, okay, maybe not. We're looking for single family homes, so not motel. Okay, it's not got a big assessed value for that matter. All right, I'm just scrolling up and down here. Now, I'm looking for just one to do with you. But if we were doing it for all our clients, we will be doing every single one of them. At least the ones that fit our criteria, which is single family home. This looks like commercial, convenience market. All right, not this one either. Now we're getting a good sampling of everything. All right. Adams Avenue. Ooh, this one might be Garberia Drive. That looks like a single family home. Scroll down a little bit. Ta-da! Single family home. 1,372 square feet. Let's see. 3-bed, 2-bath. Oh, that's perfect. We like 3-bed, 2-bath. All right. So how about this? Let's try this one. But let's just, for curiosity, guys, you could just scroll and click on every single one of those and you will see something. Now, depending on which county you are in, you may get more or less information, right? In Polk County, they are not showing us a picture of the property. You get map, you get a map, you get a location, but you don't get a picture of the house. For Duval County, for instance, we will get a picture of the house. I hope that makes sense. All right, so we're going to choose this one because we know it's a good single family home and it's the right size. So 118 Garberia Drive, Davenport. I'm not sure how you pronounce this, but you understand me. Before I put it in my research folder, let me start by putting my details in there. This is an auction, all right? And then for research ID, we're a bit lazy and we're just going to go with the tax deed, the case number. So 127-612-019. 127-612-019. Okay, there. Now, before I input the address, the first thing I do, and you could see here, verify site address on Google Map. So this is going to be my first stop. Google Map. It knows I'm in Indonesia, but that's okay. I'm going to open Google Map. So the first thing you want to do when you open Google Map is you first want to tell Google Map to go to the area. If I give the Google Map the address right away, it tends to get a little bit freaked out and then it kind of gets blocked. So it's a good idea for us to get closer first. And this is the area we're looking at for Orlando, right? For Polk County. Now I'm going to input the address, and the address for this place is 118 Garberia Drive. Davenport. You can see there's not many Garberia Drive. I'm going to guess it's a flower. And we get a picture as well. Okay, so we know this address is right, and we also know the postal code. So I'm literally going to copy and paste the address into my template. Done. Now, what is the minimum offer price? I go back in here. Minimum offer price, 13,138 and 10 cents. Is that right? 13,138, 10. Yes, that's right. Okay, so that's the beginning. Now, I need way more information on this place before we decide, right? So the first port of call is going to be Home Union. We will open Home Union and we will start looking into our property. This is where it gets fun. You get to see pictures and information about the place. So first thing, oh, by the way, for Home Union, you want to go into rent estimate, right? And then we're going to input the address, 118 Galberia. Now, why am I typing this? Is that it will find it for us. It will give me options normally. There you go, Galberia Drive, Davenport. It's raining again, so sorry, my internet is a bit slower than it should be. All right, so it found our property, 118 Galberia Drive. You see the letter right here? It says B. That means this is a B grade property. It's telling us that it's been built in 2004, 3-bed, 2-bath, 13 square, 72. It's also giving us an estimate if we wanted to rent the property and a price estimate for the house, 216,000. So let's go here. We're going to input this information. It's a B grade. B grade is good. So in the US, there are 4 grades for property. A grade is the Mac Mansion, the in the best section of New York type properties, right? Really nice. It's a nice area. B grade is a really good, is still a really good quality. D grade is ghetto. We like B and C's. B and C's, it's average price. It's not too expensive. It's still an area where people want to move in. Right, so next, we're going to be looking at the estimated market value. And Home Union was nice enough to tell me that the price estimate for it is 216,396. Okay, and then it's also told me that the potential rental is 1206. And those profit margin ratio and gross rental multipliers are actually based on the minimum offer price, but they're not, you know, we're not looking at those yet. Parcel ID, I was lazy, so I used the same for my research ID. So I'm just going to go. It's not that important when you're just doing one research, but when you're doing the entire list, for instance, in the foreclosure, then that becomes very important. All right. Now, this part, improvement value and land value, this will come through my property search from here. Right. So if we scroll down, it should give us some numbers. Land value, 28. Building value, 128,723. Sometimes there's miscellaneous items such as swimming pool. So sometimes we have to add extra things. In this case, it's really easy. So 28 and 128,723. So the assessed value by the county is 156. All right. We already know this is a single family home. So we're going to put this in. And we do know it's a 3-2. So 3-bedroom, 2-bath, right? But we're going to go and we had a question about that. We will open Zillow.com. Zillow is our best friend. There's a lot of information one can get on Zillow. And by the way, you could see here that everything is color coded. You see how it's blue right here? This information comes from Zillow, and this is color coded with this one. So we can open Zillow straight from the link. There's a reason why I'm choosing to do it like this, but it's just more because it's easier for us to look at. So 118 Galberia. Drive, Davenport. Okay, so this house is off market, and you could see here, this estimate is a little bit higher, the estimate from Zillow, 1372, as we knew before. So we're just gonna input the numbers. It was built in 2004, and let's check for the lot size. So when we scroll down here, you'll get extra information, right? So scroll down, it gives you an estimate. It tells you that the market's gone up. It gives you some comparable homes, location. The estimate is rental is much higher than what we got from the other one, but that's okay. And here you have your built. It gives you extra information such as that there's a parking, right? And here, 6534 is the size of the lot. So that's the piece of land it is on, 6534. All right, so far so easy. It's very simple, really. What we're doing is we're just adding more and more information. Our next stop is going to be the yellow one, right? So go back to the beginning, you could see what the yellow one is, and that's going to be Trulia. And Trulia is going to give us in particular the school ratings and the crime level. So I'm just going to input the address here, 118 Garb. Oh, not Denpasar, go away. Carberia Drive, Davenport. Okay. So we have a picture too. It looks quite nice, but we don't know how old that picture is. That's just the thing, because this property is not for sale, right? So you don't necessarily know whether this is a recent picture or not. However, we do know that this house was built in 2004, so it's not that old. So when we look here, we can see schools, crime, right? So keep scrolling down. And you're going to get information. Okay, there we go. So school, generally, we're going to be looking for the high school. So 3 out of 10. It's not ideal, but we do know that this area is more of a retirement area. So we're going to input here for the school. Three. Okay, now let's look at the crime rating for this area. If we keep going, we will see. It's hiding somewhere. They keep moving it, so just bear with me until I find it. Local information, there we go, crime. Okay, so you could see that the area is lowest for the area. There's a little area over here, but this is all fairly low, right? So we're gonna go for lowest. There we go. All right, so that's what we get from Trulia. Next, this is where the fun starts. We are going to look at Census Reporter, which is basically a government website that gives us information. This one is one of my favorite because it is so easy to use. So we're going to start typing to find a place, right? So same thing, we're putting in our address. There we go. And what we get is, this is what you're looking for, right? And you have different sizes. So this is block 1, is the smallest and the most granular. But when you go higher, it might take more space. So for instance, school district, the zip code, census tract, group block, right? The more you go, the bigger the information. We are going to go for the smallest, most granular information that we can find. So I'm going to click on group 1, and this is what it tells me. Polk County, Florida, 6,474 population, right? And as I scroll down, this is where we get all sorts of information. Medium age. So this area is not a retirement place, not like Orlando. Probably this is where a lot of the people work. 51% fine. We got 49% white, 40% Hispanic. So let's go with that, because we do need our number of white people in here. And it's sad to say, but we do need to look at that, because unfortunately it is harder for non-white in the US to get mortgages. So we need to take that into consideration when we are looking for a good investment for our client. Medium household income, 48,594. Okay, so now that leaves us with one thing, which is the percentage of owner, right? So we're going to go down and look at household, marital status, unit, and occupancy. So there's two things that are really interesting there. If you're looking at, you could see here, for instance, that there's a lot of mobile homes. That blue, light blue color, that's mobile home. That other color here, that's single unit. It's also an area that doesn't have a lot of multi-units, so apartment blocks. Nice to know. Owner occupied 67%, renter occupied the balance, and as well as there are 27% of the properties that are vacant. So we're gonna go for 67. This gives you a snapshot of what the market is. That's all it is. It is just a snapshot. And remember, we're only doing one in this case, but really what we're doing is all for comparison purposes. Make sense? Yes, give me a thumbs up. Thank you. Thank you, Daisy. I like the physical thumbs up. Thank you, Zed. Thank you, Miss Linda. All right. So now, next, before I go on to the most advanced analysis, I'm going to make sure that I keep all my links. Because, of course, you remember what I said to you is all this, we're not going to do just one. When we do it for our clients, we will do 12, 13, 30, 50 properties at the same time. So we need to make sure that we keep our links. Very simply, it's literally paste, copy and paste, right? So I'll start with my Google, and then I'll do Zillow. Home Union. As I say, for just one, it may be very easy to get back to, but in the case of when we're doing it for multiple, then it becomes quite complicated to go and check on all of the things again. Because also one of the things that we do is we always double check on everything, right? So we need the second person to be able to check that the information's right. Make sense? All right, so that's the base, right? And then say I've done, I don't know, how many properties did we say were available on auction here? That was 86 out of 107 or something along those lines. So say I've done 50 properties there. Then I'm going to look and say, okay, this one, and that one look interesting. Let's look further into them. And that's what the next step is in our analysis. So this is the next step. We're going to go into our templates for analysis. we have two types of analysis. So we have either for flip or for rent. And of course, the analysis will look different. But before I do anything, I need to duplicate the sheet. Now I have a second sheet and I'm interested in doing flip. So let's go for flip, right? And this is the beauty of this, is because we've done a lot of the work for you already. A lot of this will move itself on its own. So we're going to look for the research ID. I'm going to copy my research ID and it will populate my sheet on its own. There we go. And of course, I'm going to rename this sheet 118 Galvaria Drive. Oh, and the closing date we said was 16 December 2021. Now, I just want to point out that there's a method to my madness. I always write the month in letters because American dates are often flipped. So in America, 16th of December would be 16/12/2021. But for us, it would, for us, it would be 16/12/2021. In the US, it would be 12/16/2021. So just to make sure that there is no mistake, where I always write them in letters. Okay, now here's what we want next. We want to input our estimates. Oh, and I'm going to change this one because I know it doesn't work. Let's go with Redfin. Okay. It doesn't work for me because I'm in Indonesia and it doesn't want to know me. All right, so let's look at Zillow first. How much is Zillow saying this property is worth? Estimate 259,400. Okay. Now I want to know what estimates the different sites carry, so I have a rough idea of how much this property could be worth, right? So Home Union says 216,396. So it's a bit cheaper. In our experience, Zillow is always a higher, a fairly much higher sometimes estimate. So we need to balance it. But there's a lot of information that we can get on Zillow, and that's what I'm going to show you soon. Okay, now we're going to go and check HomeSnap. Galvaria Drive. Same picture. Oh, now we can see that it doesn't have a lot of space around it. And their estimate is 190, so it's a much lower one. That's okay, it's just an estimate, okay? Okay, and next we're going to check Redfin as well. Yeah, I am not a robot. Now I'm going to have to do bicycles, am I? Bicycles or traffic light? Let's go. What is it? No! Awesome! Thank you. All right. Come on. Let me put in the address. Okay, 118 Galvaria. There you go. There's only one. And Redfin thinks it's worth 22014. That's precise. All right. So that gives you a pretty good idea of when if you look at, okay, these are the estimates, we basically balance them and we look at how much they think it's worth per square foot. 28th November. All right, now the fun starts. We want to see whether it's a good market or whether it's a market that is not so buoyant, right? So the good way for us to look at this is to find out how many transactions have happened in the past few months or since the beginning of the year, and how many properties are for sale. How fast is it turning, right? Zillow is our place to go for that. Zillow gives you a lot of information, right? And you could see our house is right here, this one on Garbavia Drive, right? And you could ask Zillow, go away, okay. You can ask Zillow to tell us what is available. So let's start with what's sold. Okay, done. And 3-bed, 2-bath. Right, you could see that there's been a few transactions. From the price of them, I would think that these were not so recent. So let's make this a little bit smaller as well. Let me just zoom out a bit. Now, Zillow is fantastic for one thing, which is that it's going to give us the most recent transactions right here. And that makes our life a lot easier, right? So let's look at this one. This one's a bit further. The address 216 Jessamine Drive. So we'll start with that. 216 Jessamine Drive. It should be a 3-2 because that's what we asked for. 3-2, 1604 square feet. So a bit bigger than our property, right? Value and date. So it was sold for $290 on the 20th of August. Okay, so we got one. Let's have a look what the next one is. Scrolling down. This one. It's also Jessamine. $739 Jessamine. It sold on the 3rd of August. Okay, what did I say the size was? 1742, 237,500. Okay, look at what it gives us as well. It's going to give us a per square foot price, which is going to give us an idea of what the market is ready to pay. Because of course, we need to consider that if we're going to invest in anything, right? So next, this was sold in May, 203 Verbena Street. Size 1522 236. 27 May. Okay, there's another one there's several in May, actually. There was a lot of transactions in May. All right. So this one, 702 Windsor Estates Drive. Three two as well. 1352 2220. And that was in May as well. Oh, wow, quite a high price per square foot for this one. That was sold on the 21st of May. Okay, let's see if we can find a couple more. The more we have, the more we can look at, okay? And you could see here, we don't want to go any further than about 7 to 8 months, especially because this market has been very interesting, let's just say. So you can also see that when I hover it, it will show us. Okay, so this one, 365 Bandon Dunes Loop. Oh, that's a nice name. Okay, and then that's a 3-2 as well, right? 1486. And it was sold for 252,204 on 252,204 on the 15th of April. See if there's one last one that we can look at. So 2nd of April, 427 Garberia Drive. Okay, we're going to take that one. $1,816,260. As I say, 2nd of April. All right. Now, what this is telling us that we have 6 relatively recent transactions that can allow us to have a comparison per square foot. So it's starting to give us a rough market value for our property. And you could see here that number is 216,000. So in a way, the estimate by Home Union was very close and probably achieved the same way, by the way. All right, so something to think about. Now let's look at what's available for sale, because that, if we were to buy this property, that would be our competition. So let's see, are there a lot of properties for sale? No matching results, right? So I'm gonna have to look further. I'm gonna have to zoom out a bit more. Still no matching results. Okay. All right, so there's very little for sale in the area. This is on the other side of the lake, so it's difficult for it to be comparable. Okay, so this one, that's definitely going to be one that we look at. This one, It's a very big house, and that's probably not comparable. Make sense? So let's go with this one. That's a new construction. So that's a bit different, but we're going to use it anyway, because we don't have a lot of extra choice, which tells us what? That our property may be, if we were to buy it, that may be a good idea. Sorry, I missed it. 1251 Lesson Street. What's the size? 1555, 287, 420. And we want to know how long it's been on the market. Sometimes they don't tell us. So we got to look. Okay, that one is because it's a new property, it may not have the number of days on the market. Let's check on the side. This one. Okay, it's not telling us at the moment. Now, this one is a bit further and it's by the lake, so it's difficult to find a proper comparable, but let's go with this one, which is on the other side. How about, where is this one? Let's see. That's the new construction as well. 17 homes, so that's not comparable. 7 homes. Let's look at this one. So basically, there's very little for sale in this area. 3398 Maple Lane. Three two 1296. Okay, and the offer for this one, 27900. Let's see if we can see how long it's been there. Somebody must have paid to remove the number of days available. They do that. There we go, listed for sale. So it's only a couple of days. 14, 28, 14 days. 13 days, you could see it here, sorry. See, time on Zillow, 13 days. And 279. Okay. But it's a lot more expensive, right? So basically we know that there's not a lot on offer in this area in kind of second market. Oh, go away. These are all new ones. This is on plan. New construction. Three. Thinking about it, sorry about that. Okay. Three 577 Yaren Drive. Okay. 1672. The other thing that we need to keep in mind with new constructions is that people may want to go for new construction. So that's our competition, right? So that's the other thing that we need to look at. 331,900, but that's way more expensive. And I'm not sure we can see how long it's been on the market because it's new. Yeah, there's no number of days on the market for this one. So basically, when we look around, Zero annoyed at me, there's not a lot for us. And I've scrolled out quite a few times already. So there's really very little available in this area. The middle right here, that's where the house we're looking at is. That's actually a pretty good thing, right? So there might be some demand for this house. So let's go there. Okay, so I made some research, right? And I looked at, and we have rough ideas about what's being demanded. But now, is it enough for us to say, let's go and buy this property? What is it that we do not know yet? I've done all my research online. I've seen pictures. What is it that we do not know yet that is super important for us to know? What we do not know yet is the condition of the house right now. As I said before, if they're not paying their property tax, they're not doing maintenance either. So the house may need a lot of repair. So we need to know that before we even decide this is the maximum price we are ready to pay. So once we've done all our research, we may come up with a list and say to our scouts, can you go and check these properties? Our scouts, I will show you a couple of video later, but our scouts will go and check the property and come back to us and say, okay, we checked the property and this is going to cost $50,000 in rehab costs, for instance. I'm just going to stick to this example right here. We also know that we have extra costs such as closing costs as well as miscellaneous costs. Miscellaneous costs will include insurance for the amount of time that we hold the property, right? So now that will give us an idea about what the maximum offer price will be for us. So remember, what's the minimum bid? $13,138.10. That's what the Polk County is looking to get back. But of course, it's unlikely that we will pay the minimum. So we want to make sure what is going to be the price for us. So first thing that we need to know is what our target sale is. And it's important. We know that the average recent sale has been 158 a square foot, more or less. So we need to update this number right here. So let's say 155 a square foot. Maybe not, maybe a bit more. 160 a square foot, right? You could see that the current offer is 200 a square foot, which is probably a little bit too high. But if we say, okay, remember, we want to price the house to sell. There's no point for us to have the house on the market for 5 months waiting for that price to be hit. The faster we sell, the more you can go and reinvest, right? And our target is to make a minimum cash on cash return of 30%. So here, I want to know what our maximum bid would be. So if I pay, that's our maximum offer price. My maximum offer price is going to be $86,600. Anything more, we're not sure we're going to make 30%. That's a maximum offer price. If the bid goes above that, we're done, we're out. Does that make sense? It is really, really important for us to be looking at it this way. Okay, and of course, if we acquire this property for 40,000 instead of 86, hey, that's profit for our clients, right? We like that, and that's generally what happened. But the maximum bid price will be this, and we will not go above. If you join us at any of to watch any of the auctions, you will see that we will bid on something and say that's our maximum price, that's what we're putting in. After that, we're done. We go to the next one. There's always another property that we can purchase. Yes? Okay, so that's how we do the research. Of course, there's a few extra things that are involved in our making the decision. And in particular, we must have the report from the scout. This property is still here. It's not burned down. This is the condition we see for it. This is how we view it, and all of that.
So the condition?
Yes, Mr. No.
Yeah, the condition is depending on the scout to determine whether the house is
Yes.
need rehab or something like that, right?
Yeah, yeah. So it's
Okay.
very important to have a good scout, and a good scout that understands the market. And that's why we're very lucky, because we have extremely good teams of scouts that we can send and experience. But yes, so that would be some of the decision. Then after that, of course, we would have, we potentially would have a decision on the property. Does that make sense? So I wanted to give you a quick idea about how it would work. Of course, if we decided that we were going to do rental, we have other pieces of information that we would look for rental. We would look at the recently rented properties and what is available for rent on Zillow. And just out of curiosity, let's see if there's anything available for rent in the area. Well, not a lot. Only a few. All right. Okay. Good to know. It might be an interesting area for us to look at. All right. So that's how it works. Now we are giving you access to those templates, so you can actually go and look directly and do as much research as you want. Not a problem.
What is Redfin is all about?
Redfin.
You know what
Redfin.
is Redfin? What is Redfin?
Redfin is just another one of those property websites.
Okay.
They're all the names that you have here. They're different property websites. There's a few more as well.
So it's good enough for Home Union to find the info on Home Union?
We like looking for the info in different sources.
I see.
Not just like, as I said before, for instance, with Zillow, I pointed out that generally Zillow's estimates are very high, right? Redfin's estimates are often much lower, and Home Union is even lower. So it really depends what we're looking for. That's truly.
So it depends on Skyrent or Skyflip, right?
Yes. Yeah.
Depending.
Yeah. So in this case, I would say most likely what we would be looking for with this house, depending on the condition it's in. Can we purchase, if it's in good condition and it can be fixed and made good in like a couple of months, then we'd be looking at getting that one for maybe rental. But otherwise, we most likely would be looking at getting it for flipping.
So how likelihood you can get the tenant to straight away rent the property? How likelihood? How
Did
fast?
you see how much was on offer?
I see.
There's very little on offer. So if somebody wants to decide to see if they like the area, they might consider renting, but there's really very little available in this area.
Yeah.
So that actually for us is a good thing. And I had to zoom out my map many times before I got 1, 2, 3, 4, 5 offers in the area. So that tells me there's no offer. So just something for us to look at. But most likely, this is an area where we would most likely look at flipping rather than renting. Also, because if you look at it, you could see, look at here, percentage of ownership, 67%.
So Florida state is very popular for rental or what?
There is rental in Florida, absolutely. Whether I could say popular, I think there are some areas where there's way more rental than Florida. because
I see.
people move to Florida to live.
Yeah.
But there's still a need for rental. So say you get a new job in Jacksonville, Florida, you may not buy a property right away. You may be looking at, okay, let me rent for a year, see if I like the area, then I will buy. So it's just a decision for people. And that's what we need to assess, which one is going to be more attractive. I hope that makes sense, Mr. Noor.
Yes, thank you.
Okay, you're welcome. All right, so that's what the research looks like. As I said, you guys have access to this and we're very happy to share with you. Okay, so let me just stop sharing this and go back to my other screen. All right, now research demo we did. As I said before we went into the research demo, we have free resources for you to actually give us some feedback on either Facebook or on Google. So feel free to post those reviews there. And Daisy, I think this Eunice wasn't there before, so if you can repost again, that would be kind of useful. Thank you very much. All right. So now we talked mostly about flipping. So let's talk briefly about strategies for rental. And then I will show you a couple of other things. So this is a phrase that Ralph uses, is cash is king, then cash flow is his mother. Cash flow is important. You need to have cash flow in business, right? So rental is great for that. Rental is awesome for creating cash flow. And of course, some people think, oh my God, rental, I don't want to be managing tenants. And what if they call in the middle of the night because the toilet needs repairing and all of that? Yes, that could be a disadvantage. There's also areas in the US where the neighborhood are not very wealthy, which means that it's more rental, but you may not be able to get a lot of appreciation on your asset. And sometimes it's even difficult to actually sell the property. So there are some advantages though for rental. And this is the BRRRR strategy that we were talking about earlier. It's actually one of the best wealth building strategies you can come across. If you rent, you can actually have the tenant pay for your mortgage, right? You can leverage your property, you can have a mortgage on it, and the cash flow from the tenant will pay down the debt. You get great tax advantage for it. And it's a hard asset. As I said before, you can scale it up with bigger asset class. If you have the right manager, it can be purely passive. And people always need shelter. In general, property prices do appreciate. So if you hold your property with a tenant in it, it will appreciate. So that's actually a really good one to look at. Now, there's always a question, of course, how do I decide if I should rent or sell? Well, the truth is, it will completely depend on your personal strategy. Rental will build wealth surely and slowly. And with leverage, you can actually increase the wealth building. If you are doing the flipping, you will increase your wealth faster, but it's more of a ride. If you're interested in earning monthly or quarterly income and lower taxes, rental is for you. So same thing as what we were talking about in terms of the rental research, right? You need to look at the area, look at the ethnic breakdown, medium income level, vacancy rates, the average property price, and the owner and tenant percentage. And these are three of the rules that you need to keep in mind for rental management. Oops, too fast. First, the 2% rule. That's a guideline because these days we really should call it the 1% rule. But basically, your monthly rent amount should be around 2% of the value of your property. So if you look at a number of properties to purchase for rental and you say, okay, I want a 2% rent, 2% being the monthly rent, and you see that every other properties around are closer to 1%, it is possible that this property would be too expensive for you to purchase as a rental. So something to keep in mind. And as I say, these days, I find that the 1% rule is probably closer to the 2% rule is probably closer to the 1% rule. So just something to think about. Secondly, the 50% rule, right? Your operating expenses for your rental will form about 50% of the rental. It's a quick estimate. So the thing that you need to keep in your mind is if the rental will make me $1,000, most likely you will really only receive about $500. It's a quick estimate. These days, we find that it's probably closer to between 30 and 50%, but it's just a quick way to estimate how much it will cost. And that will allow you to also see how much mortgage you can take. And last but not least, and this is a one that I think everybody knows, the 30% rule. And that will allow you to look at how much you can charge for rent. So 30% means 30% of the household income maximum should be spent for rent. So the area that we're looking at, if I'm not mistaken, it was 48,000. So that would mean that your monthly rent would be about 30% of 48, your yearly rent. So 30%, that would be about 1,500, under 15,000. So that would be about 1,500 a month maximum that you could have. And if you want to peg your rent much higher than that, it will be more difficult for you to rent. In fact, did you see that the properties that were for rent were all above that level? They were all about the $1,800 a month. So these are the 3 rules that you need to keep in mind before you even consider investing in a rental. And by the way, these rules are pretty much universal. It's not related to the US per se. And that's where I find it really interesting. When I lived in Hong Kong, I considered getting a rental property. And then I realized that even without thinking about the 50% rules of the cost, I would have to put money at the end of the month to actually add on the rental I would receive to pay the mortgage. So it was not being an asset, this was actually being a liability for the length of time of the mortgage that I would have to add money on the top. And that was even before I considered that there's also costs, operating expenses. That makes sense? Are you following me? Give me a thumbs up if you're still with me. Thank you, Miss Linda. Thank you, Miss Daisy and Mr. Prasanjit. Thank you. Thank you, Mr. Noor. So what are good rental targets? For us, we look for a minimum rental of about 8%. In fact, in our research, we always look for a minimum of 10% net yield. We're also looking to break even in 5 years or less. And last but not least, we are looking in a working class area with positive job growth. We're not looking for the Mac mansions or the penthouse in New York. We're looking for regular income people that can pay the rent. So these for us will be good rental target. And remember, don't wait to buy real estate, buy real estate and wait. So that's what we're looking for. Now, I'm not going to give you a research demo, though you could probably do it yourself, but I do want to show you a couple of things. So if you just bear with me, I have to switch my share. And I want to show you a few of some of our research. Okay, so for our clients that are already in, before they decide to invest, these are the kind of things that they will receive, right? So they're going to receive a flip investment analysis. So for instance, this one, that's for flipping, right? It's in Duval County, which is Jacksonville, Florida. And we could see that the median household income is $47,000. We give you all the research. And one of the things about Jacksonville, Florida, is that it's a very attractive market. All right. And this property in particular, this is Royce Avenue. We did acquire it at auction, and we were able to acquire it for $150,100. It has an estimated target price of $357,000. So it's in the wealthier area. It's also a bigger house. So what we send to people is really some of the research we've done, the recent transactions, what it sold for, and of course, estimates of what the total cost is going to be and the total return is going to be on the property. And then our clients are now able to actually look at, okay, does it make sense for us? So this property promises more than $115,000 in profit. And it was snapped up by several of our clients who decided to co-invest in this property. Now, this is the latest property that we're looking for Airbnb in Houston, Texas. So same thing, we give people some information about Houston, Texas. And this property is a single family home with 4 bedrooms, right? And we're looking at a target nightly rate of $450. So these are all the estimates for our clients to look at. And this is what we're saying, minimum rehab is needed. We just need the fresh coat of paint. This is an area where the similar rooms are listed for $500 a night. This is very important to have at least 15 guests in this area. This is an area where we have a lot of experience. All right, so we send this out to our clients. Does that make sense? That allows you to make a decision. Another part of this, and I want to show you this, and when you are interested, you can talk to your consultant to show you this. And we always have questions about taxation and how it works. So we actually have estimates that we can send you, simulations that we can send you on what it would mean to be invested. So in this specific case, we did an estimate for a client with a $50,000 investment with minimum return of 30. And we can, of course, change those numbers. And what it would mean for when the person wants to get their money back after 4 flips. And you could see here that there would be a little bit of tax paid, but the minimum would be over 100% after 4 years. So that turns out to be a really good return. All of this can be shared with you by your consultants. Okay, and I want to share a second page with you. So let me just give me a second, because I showed you about some of our Airbnb. All right. So this is actually one of our Airbnbs that we have. Sorry, let me just go here so you can see the whole thing. This is our first Airbnb that we've had. You could see here it's got 32 reviews, 4.81 stars, and we're actually a super host in Houston, Texas, right? They're very happy about the property. You could see, of course, pictures. This is the newest one. This is the newest property that we got. And it's the same thing, is being offered for rental for a certain price. This is tranche. It makes no sense to me. And this is actually this house that we recently purchased for our client. This is the research on Trumpula Drive. This is what we are showing what we showed to our clients before we even purchased the house. It's a 4-bedroom, 2.5 bath, right? It's also, it requires minimum rehab. This is an area that is good, right? So we show pictures, we show you the market and everything. So this is how it works for our investors. We will always show you the research. With Airbnb, what we have seen recently is that there's been a lot of demand. So while we show you the potential investments, sometimes we do not get it. And more, because there is demand, there is a requirement to actually show what we call earnest money, which means that we kind of need to even put in a deposit before we can even see the property. So that needs to be taken into consideration as well. But as much as possible, we will buy either that specific property in the case of Airbnbs or something extremely similar with the similar types of return. All right. On that note, and having thrown so many numbers at you, I would actually like to give you a quick break for about 15 minutes. And I will see you back here in 15 minutes. Okay? Thank you very much.
Thank you. See you.
See you later, Mr. Noor.
Bye.
All right, welcome back. Welcome back. Give me a thumbs up if you're back, so I know. Okay. Thank you, Mr. Prasenjit. Thank you, Mr. Noor. Thank you. All right. Okay. All right, so let's start with this. I would actually like to start with sharing a video with you, and that's Datuk Seri Paul Chong, and he has some really nice things to say about Noble Sky, but that's just, I want to show you how working with Noble Sky, what it could mean and how you could get it done.
Ladies and gentlemen, I'm Paul Chong from Malaysia. As the former CEO of a global investment bank, a private equity fund manager, a lawyer and an accountant, I'm well versed with investment models. Today, I want to share my experience in partnering with Raouf Said and Noble Sky International in an effort to build my real estate portfolio, especially in a country that I cannot conveniently reach or be in at all times, such as the United States. For my business and career, I'm based both in Hong Kong and Malaysia, but I've lived and worked in major financial centers around the world, including London and New York. So I know how expensive things can be in order for us to maintain a comfortable lifestyle. I got to know Raouf when I was attending his event back in 2018. Now, this was really a bizarre chance meeting. You know, back in 1995, I was a poor MBA student at Wharton, and I had to work part-time for $4 an hour, collecting information on property foreclosures and tax liens by going through, tons of records in public libraries in the US. I was working for a real estate investment company then. Now, they didn't tell me what all these were for. All I need to know was get the information for $4 an hour. And then Raouf's advertisement on tax liens caught me by surprise. I said, my God, this was 23 years ago when I was blindly collecting, market data, not knowing what my employer was going to do with them. And now Raouf will tell me. So from that chance meeting, we went on to talk about things beyond tax liens into actual real estate investments. Now, I'm a Chinese person, and I'm a firm believer in real estate. Ironically, despite me being a Wall Street investment banker, some 80% of my net worth is in real estate. I have property interests in the United States, the United Kingdom, Hong Kong, Malaysia, Singapore, and Australia. all of which I had to manage personally. Now you can imagine the pain I go through every year when tax season arrives, right? Because reporting the rental income, the depreciation, the expenses, on all these properties across 6 countries around the world, it's a nightmare. I even have Deloitte do my tax returns for me, right? One of the big 4 accounting firms in the world. Then Ralph offered me something I found very, very useful. A professional team that will help me manage at least one of the countries that I'm invested in, the United States. From search to acquisition, from refurbishment to letting and sale. It's something that also can be structured on a profit-sharing basis. Now, as an investment banker, I love profit-sharing schemes because that gives my partner, in this case, Noble Sky, the utmost incentive to do the best they can, to realize the highest profit they can, rather than working for me or with me for a fixed fee. As a foreigner in the United States, I'm now assured that I can safely and comfortably own many properties in the United States, even without stepping foot, in the US. Noble Sky offered a business model that makes perfect sense to me. And that part of my business is now, if you like, run by a professional team that does not need my input or time at all. So I get time to focus on other businesses and family. Say, the 3 things that I value in them. Number 1 is their presence in the United States. I made a mistake previously buying half an office block in Melbourne, totally unseen. So my friend and I were sharing this, and we the realtor or the real estate broker showed us the building on Google Earth. We signed it, cut them a check while we were in Hong Kong, and that was it, right? That turned out to be a bit of a mistake because nothing beats what we call shoe leather investment in real estate. The ability to walk the streets, search the local databases, compare transactions across similar properties, understanding the local market, talking to local realtors, right? Getting a deep sense of the community, the demographics, and so on. So that is important. Number 2, Ralph has a professional team that is highly experienced, not just as buyers, but as a team that can pull together the required labor and professionals for the renovation, refurbishment, and the ultimate sale, all at acceptable costs. And finally, what I find truly intoxicating is the drive that I see in Ralph and his team. They work tirelessly to manage, that property portfolio for us, and more importantly, their business acumen, the ability to time sales and at what we call optimum prices. Now, you may not want to sell properties at the highest possible prices at all times. There may be circumstances where you do wholesale deals. You make 3% less, but you make it 6 months sooner, and that's going to increase your internal rate of return tremendously. So it is this balance, right? The ability to read the market, not just buying at the lowest price and selling at the highest price and wait until the cows come home, but to time purchases and sales accordingly. That is one of Ralph's expertise. So since 2018, my group of investors in Noble Sky, under Ralph's guidance, have acquired 13 properties in New York and Florida states combined. Some of these we have achieved exits with fantastic returns. To draw an example, 6 of the properties we sold in Florida made us between 30 to 59% profit. And the 3 we sold in New York State, we were very happy with the exit, and one of them made us 85% in profits. So I want to thank Ralph, ICE, and the Noble Sky team for making my life easy as I venture into the real estate business in the United States. It's something that I can't do because I'm not in the US all the time, and they have been giving me returns that I will never dream of attaining in Malaysia. So if you have the chance to work for Ralph or work with Ralph and the Noble Sky team, do try and take the opportunity to do that as soon as you can. Thank you.
All right. Thank you very much, Dr. Paul.
Ladies and gentlemen,
sorry.
I'm Paul Chong.
All right. So now I would like to show you a few of the properties. In fact, this is one of Dr. Paul's properties in that he was part of the group that acquired this one. And they actually acquired full property in New York State. And as he said, 3 of them have already been sold. This one was acquired on auction for $42,000 and it needed a little bit of rehab. We spent $65,000 on rehab, but had great equity gained on it and were able to sell it for $215,000. Now, it's not a wonderful looking house. It's simple, right? But when we acquired it, oh, and I want to show you this, it's a little bit small, but this actually is the tax deed signed by the town of Montgomery in Orange County. So that's really important that when you buy a tax auction, you get the tax deed directly from the government. And this is what it looked like at acquisition. Nothing fancy, to say the least. In fact, the roof had some interesting pieces of light, basically. And so a lot of the rehab work that we did had to focus on the roof and making sure that the insulation in this place was right. So we basically rehabbed it, cleaned it, made it look good. Not fancy. We didn't redo the kitchen and put in some fancy cupboards or anything like that. We just made it look very clean, right? And this is what we listed. And this property was sold very quickly after the listing, and I'll share the story with you a little bit later. So stick with me, and you'll hear the story of the $215,000. And this is Mr. Richard Jenny. Mr. Richard Jenny was actually one of the partners in the group that acquired those 4 properties in Orange County, New York. And he invested $45,000 out of a total group contribution of $278,000. And the truth is, the minute they bought those properties, it had a 273% portfolio value growth. Yes, after that, there was some money that needed to be spent on rehab. And that's normal. That's how it works. This property, this is one of the properties we have in Jacksonville, Florida. We actually have quite a number of properties in Jacksonville, Florida, because it's a good market for our clients. And this is one that we acquired for $56,400. Same thing, the tax deed signed by the county government. And this is what it looked like when we acquired it. And you could see here, right here at the top, that's actually Ralph climbing in through the window and taking possession of the place. When you buy at tax auction, they do not give you the keys. So it's entirely up to you how you get into the property. And this was one of the way through the window. As it turned out, one of the windows was open. So when we rehabbed it, we had to do a fair amount of rewiring, and this place actually had termites, so we had to work to get rid of that. And then we cleaned it up, we made it ready, and we just put it on the market. You notice here, right, that this had furniture in it. So the reason why we do the staging, which is what it's called when we put furniture in the place, is so that people that will rent or buy it see themselves living in the area, living in the place. That's why we made the whole property look very nice. Of course, we painted it both inside and outside. In case you don't remember, it was kind of a dirty beige before. Of course, cleaned it, gave it some curb appeal and everything. And this is Mr. Margel DeLois. And Mr. Margel DeLois was actually part of the group it's also the group, one of the groups that Paul belonged to, that acquired 9 properties in Jacksonville, Florida. And he only put $5,000 in there. That was his test contribution. He wanted to make sure that things would work well. And he was very happy with it. In fact, he was so happy with it that he actually went on to acquire his own rental property in Texas. Mr. Kamaruzaman Ghaffar has been one of our clients since 2018, and he's been very happy about how our things have been managed for him. And in 2020, he actually decided to also include property rental. So he's part of the group that has both rentals and flipping. I want to show you this quick video. I have to warn you, the sound is loud, but I'll show you this quick video. So in 2019, we actually had some of our clients fly to the US with us in Houston, Texas, to attend an in-person auction in Houston, as well as to visit some of the properties. So this last property, the people who visited it liked it so much that they decided to purchase it, even though it was all renovated and everything. It was a great area in Houston, a great property, great neighborhood, lots of demand for Airbnb. So the group decided to purchase this property for Airbnb. They still got a good discount to the market value because this property was being sold by the daughter of the gentleman that used to own it, who had passed on. And she was very motivated because they lived completely in another part of the US. So it was very difficult for them to manage. We decided to rent it out. So we paid $270,000 for it. We put some furniture in it, of course. And our initial estimate was 15.79% return. Keep that number in mind. And this is what it looked like when we listed it. Right. And the first month we rented it, we made nearly $5,000. And these returns started going up and up and up and up and up. And in the end, for the full year, instead of the $45,000 that we planned on, the property made $71,064, which is actually returns of 25.95%, nearly 26% return. And did you notice the property appreciation on this one? There's actually, it went up from about 270 to 370 if we chose to sell it right now. But this property is a great return maker. So not really interested in selling it at the moment. The owners are very, very happy with the returns. So there was a little bit of a question when we listed it in August, whether it was a good idea to have Airbnbs in this climate. And one of the things that came out is in the US, people were still traveling. Right, they had lockdown for a couple of months, but after that, they really started traveling again, but did not necessarily want to be staying in a hotel and bump into people they do not know in the elevator. So they were really happy to rent the whole house and stay in the whole house on their own, which is one of the things that made this property extremely profitable. And in fact, Airbnb in the US has been doing very, very well. And you could see with a lot of remote work that Airbnb has seen more and more monthly stays happening. So that's actually been very good for Airbnb in the US. So let me ask you, what would you rather be doing? Airbnb, rental, flipping, or all of the above? What do you think?
All of the above.
All of the above for Mr. Noor. Airbnb for rental for Miss Linda. All of the above for the rest. Okay, and Daisy wants rental. All right, cool. Thank you so much. All right, so let me talk you through the cost of doing this on your own. It can be extremely expensive if you are going to do it and do it right with the right corporate culture, corporate structure. If you're going to do it right, it can be extremely expensive to actually do it yourself. And in particular, you will have to go to the US as well for business, which is more difficult at the moment, of course. So our estimate of the minimum cost for you to do it on your own would be over $43,000. And I don't know about you, but personally, I would prefer to invest $43,000 rather than spend it in corporate costs. And even if you had them, do you have the time to manage this? You remember the auction that I showed you that happened in the middle of the night? Right. In fact, we have a team in Noble Sky that we jokingly call the ghost team because they work mostly US hours, right? They work in this time zone, not our time zone. It could be capital limitation. If you want to do it on your own, do you have enough to do your solo project? And third, experience may be a challenge. So this is what we do for you. We make everything passive. And Mr. Noor had this question, right? All you have to do is decide yes or no on an investment, and that's it. The rest, we do everything for you. What we are offering to do for you is your very own 100% fully owned, done for you real estate business in the US. We're not going to upsell you to any workshop, mastermind, coaching. You're already in the workshop. We're not going to charge that. You can come back in the workshop as many times as you want. So here's what we'll do for you. First, complete Wyoming corporate formation and setup, right? And as we showed you before, the Wyoming holding entity that will hold the operating entity in whichever state you will invest in. And this is what it would look like. For instance, you could go onto the Wyoming Secretary of State and you could actually see your company registered right here. This specific company belongs to Mr. Faizan and Ms. Mirawati. And you could see as well that Ralph Said is the president because he needs to be able to operate the company and we need to be able to do the work for you. Next, we will do all the taxation and bookkeeping. Now, I have a lot of friends in America, and they always say, not jokingly, that the one thing they are scared of is the IRS. You do not want to be working against the IRS, ever. Right? So it's very important that you file the papers at the right time. So this is Jenny Enterprises. That's Mr. Richard Jenny's company, right? This form, 5472, carries a $30,000 fine minimum for not filing on time. And same thing as I said before, I'd rather be investing this than giving that money to the IRS. But it's me. So we do all of that for you, both for corporate and personal. Next, we will, of course, do all the corporate compliance. So all the paperwork, all the legal documents, bylaws, shareholders agreement, operating agreement, share certificate, that's all included. Of course, research, analysis, and acquisition, I don't have to spend too long on that. We already spent over an hour looking at it. All our clients will get the investment analysis before they decide, but of course, we do all the work in the background. And I want to show you, because I mentioned that earlier, I want to show you a Property Scout video that we got for one of the properties that we did purchase in Jacksonville, Florida.
We are at 624 Lawton Avenue. This house is vacant. You can tell by the stuff on the side of the road. Whomever tenants were, they're no longer in here. This house does have an old metal roof. So to convert this roof over, you have to go with 3/4 plywood and architectural shingles. So this roof was probably going to be about $6,800 to $7,000. That is stucco with siding. So you're probably looking at another 3,500 on the outside. Rehab on the inside is probably about 30 grand. So I'm gonna say this rehab is probably gonna be somewhere around 40, 45. Once again, this is 624 Lawton Ave.
So it may seem like he hasn't seen the inside, but they're very, very good at estimating from just seeing the outside what the state of the inside will be. And we've never had really bad surprises. We've had bad surprises with termites, but that's never been over any reason for us to go back to investors and ask for more. So this is, of course, included in the service. Next, of course, we also need rehab management, right? And rehab management means that everything needs to be done and fixed. So I'm going to share this quick video with you. And this video was actually taken after the learning journey. Our team drove up from Miami, where they were taking a course, all the way up to Jacksonville, which is about 9 hours, to check on the rehabs.
Sagging pretty bad, so we're having to bring it back up, get some new piers under it, get it back level where it's flat across again. We're going to take this wall out, open it up, bring it open so we can kind of run our living room and our kitchen area.
Of course, if you fancy wielding the hammer, you can fly to the US to do that. Well, I don't know about you. I love the flip shows on TV or on YouTube, but I also know that they're not that realistic, and there's a lot of things that they're not showing you, right? And you need to have a really good person to manage the rehab. And we are very, very glad that our strategic partner in the US is Mr. Ray Dias, and Ray Dias actually has over 40 years of real estate experience. He actually came out of retirement to come and work with us, and he specializes in rehab in any residential properties in every state. So that's a huge help. He has crews in every state. Of course, we don't choose to work in every state, but we have been benefiting from his experience. With Airbnb as well, right? We need the right manager. So this is Don Blush, the house I showed you earlier. And you could see that at the time there was 27 review. Now we have 32 and an even higher rating. And it's important for the property to be managed well so that we get good reviews, of course. And the person who does that is Mr. Chris Merdine. And Chris actually has over 15 years now of real estate experience. He manages all the Airbnbs in the Houston area and also specializes in wholesaling and properties for cash buyers. So he's been one of our strategic partners in the US for 3 years. So you get access to our partners in the US to doing that. Next, sales and listing services. And it might seem like, well, this doesn't really have a value because I can just call a realtor and list a property. It's a little bit more involved than that. First, you do need to have a really good realtor. Second, you probably want to stage the property. So let me show you this video of a property that is staged for sale in Jacksonville, Florida.
Okay, so main entrance, entering the living room. So there you go. This house is almost done, and this is the living room. And over here in the kitchen, we are almost done installing the cooking hood. And this is the other living room with a fireplace. Okay, we've repainted the entire house.
So yes, so this is something to keep in mind. So this property in particular that was in Jacksonville, Florida, as we say, it was actually, I know it's quite small, but if you can see it, this is Howe Drive in Jacksonville, and it is being owned by Six Sky LLC, which is one of our LLCs. and it was purchased for $165,000 by this Mr. Spaz. Right. This house, you've seen this one as well. You remember that we sold it with a very, very high return. Well, the original contract of sale that was done in August 2020 in full swing of COVID was actually for $185,000. And that seems like fairly low if you think about it. 3-bedroom, 2-bath. And this is about an hour's drive from New York. So it's a very sought after area for blue collar workers that actually happen to work inside of New York, right? Unfortunately, the gentleman who had signed for this property found himself unable to secure the mortgage, even though he actually had been pre-approved. So we put the property straight back on the market and received an offer for $205,900. And within less than a week, we got a second offer, which we accepted for $215,000. And that's how fast the market was. This happened in October 2020, and it was the sale was completed in November. So it is important to manage this and to have the right people to manage it. Last but not least, we have actually invested in investor grade online portals so you can still see your investments. And this is our AppFolio.
Welcome to the AppFolio Investor Portal. This is a back-end view of an actual client's portfolio. Right, once you're logged in, you can see the dashboard, which will give an oversight of all of your investments. Okay, so you can see here these are the contributions, and these are where the 3 properties are in this particular portfolio in New York, in Jacksonville, Florida, as well as in Texas. So there's a tab on the left for tax forms. There's nothing here right now. And documents on the left, you can see these are the type of documents that you'll be signing with Noble Sky, as well as things like the tax deed. Let's take a look at one of them right now. So this tax deed, as you are seeing right now, is for Burgoyne Drive in Jacksonville, Florida. So you can see that this property now has been titled to your holding entity. All right. So these are all being kept in your AppFolio portal. So distributions will show how much returns have been given to you. So what you're looking at right now is rental returns on these different dates and the amounts for the rental property in this particular portfolio. Right, contributions, what amount of capital that has been contributed for different projects. So take a look at one of them. So this particular project, for example, has a total contribution of 68,000, and you can see there's 100% ownership here. Okay, and there are 3 members in this particular holding entity, so each of them put in different amounts. So they you can see their ownership over there. Right, so this property, this is a picture, and the current market value is about 138,000. So remember, you bought it at 68,000, and it has a current market value of 138,000. Right, so this is again an overview of the returns right now. Okay, so that's about it. This is what you get as an investor, be able to see what it looks like, your portfolio in the back end.
Okay, so I hope that makes sense. Right, so that allows you as an investor to actually see what is going on. So this is a total value of over $37,000. Now, I want to show you this video. This is Miss Serene Key. You may remember seeing her in one of the videos visiting Dawn Blush. And let's hear what she has to say.
Hi, I'm Serene. I used to be a banker dealing with investments, and I handed over more than 100 million worth of funds from my high net worth clients. So I'm actually pretty exposed to all kinds of investments. But from young, actually, I'm also very passionate about investments and always look around for good opportunities. So when I heard about this opportunity from Noble Sky, I felt that it was an interesting idea, the way they did it. So me and my husband decided to invest more than 250,000 into our investments. And I would say that I'm pretty happy with so far with what I see. We have some in near Niagara Falls, and some near New York City, I believe, because we participated in a few. And I think there was also a private auction that was conducted for us. So I'm very pleased with the service. And then I think we managed to get some good buys. And I personally went down with the Noble Sky team on the US tour to see how it's actually done. So it was very interesting, and they really followed to what they have said. It's a very disciplined way of buying US properties. So I'm happy with how it's handled. And actually, one of the projects currently is being the property which I personally saw when I went to the US. It was called Dom Blanche. It's actually being rented as an Airbnb property, and that has been giving us decent rental income. Every month we'll be receiving some returns. So I'm pretty happy with it. Yeah. Okay, actually, I went for the course that Noble Sky conducted as well. I mean, they actually show hand and let you know everything that you need to know. I would say actually the whole process is not that easy, but however, Noble Sky, they made it easy for us, and I leave it to them really to handle the rest. They got their CPA, they have their team of people, and also they have their own ground team in US looking out for us. So I guess our investments is well taken care of, and I feel comfortable. Definitely, I feel that they are professional, they are responsible, and if you are looking for some investments or some, like let's say, US properties to diversify your portfolio, I think it's a wise choice to go with Noble Sky. This is my take. Yeah.
Sorry about that. I lost my mouse for a second. Okay, so as we said, it's valued at over 37,000. So I'm pretty sure you would agree that $10,000 for this service is a good price. And we're actually offering it to investors for $5,000. And this is what you get for $5,000. You get either Sky Flip or Sky Rent. So Sky Flip, we call a fat check, which basically is buy, rehab, and sell, remember, right? You get paid once the whole transaction is finished. At the moment, we're kind of between 15 and 24 months, as I mentioned, because of COVID, but we are working at bringing it back to the normal rate, which is 9 to 15 months, and even lower to closer to 6 months, right? We are always targeting 30% and above. That's meant for the higher risk taker, because you do have to wait until the flip is complete. In the case of Sky Rent, the forever check, it keeps coming. Buy, light rehab, and rent. You get paid every month between 10 to 20% rental yield in general, and that would be recommended for those of you who have less risk appetite, of course, and want to have passive income. And if you want to do both or all of the above, because Sky Rent will also cover Airbnb, you can do Sky Duo. And at the moment, actually, we have a little special offer. Bear with me until the end so I can share the special offer with you, the very special offer. But Sky Duo will be $8,500. Sky Flip or Sky Rent will be $5,000. So how does Noble Sky make money? Well, here's the truth. We make money when you make money. So the way Noble Sky gets paid really is on the performance fee. So, and the performance fee is based as a percentage on how much total investment you have with Noble Sky. So let me give you an example. Say Mr. Noor here decides to invest $20,000 in an Airbnb, so that's a rental, and $20,000 in a flip. His total investment is $40,000. If by the time the flip comes for sale, he is only got 40,000. He keeps 60% of the profit and Noble Sky gets 40% of the profit. But if before the flip happens, Mr. Noor decides to invest another $20,000, then by that time, he belongs to the platinum tier, 50,000 to 250. So he has $60,000, right? I'm sure you calculated that with me, which means that Mr. Noor gets 70% of the profit and Noble Sky get 30% of the profit. Now, Miss Eunice, if you decide to come in and invest over $250,000 like Miss Sirin did, well, then your profit split is 80% and 20% for Noble Sky. And the rental split works in a similar fashion with Noble Sky. And that's really how we make the money. Now, in summary, to join, you will just do your concierge setup fee. Then you sign all your documents, you have all your setup ready, and then you can deploy your capital. You don't have to put in your entire capital right away. We have special bonuses for you. If you believe in US real estate and you can see that it will give superior return, and you want to have the 100% done for you real estate business, have the mindset of an investor and a businessman, and not looking for a get rich quick scheme. It's a get rich slow scheme. So here are some of the special bonuses that we have for you. The first one is we will give you some capital, matching capital, depending on what you join with. So if you're with Sky Flip or Sky Rent, your first investment will generate a matching capital of $2,000. If you are investing in Sky Duo, your matching capital will be $5,000 on your first investment. And this is how it benefits you. I really want to draw your attention to this. Say in your first investment, you are investing $50,000 and the total funds required for the project is $100,000. If you invest $50,000 and you have the $5,000 of free matching capital from Noble Sky, your total capital in the project will be 55 instead of 50, which means that you have 55%. When that project sells, say at $166,000, you will receive 55% of this amount instead of 50. Different steps, of course, return the capital first. That includes the matching capital, and then doing the profit split on the balance. Since this is a $50,000 investment, that means the investor is in the platinum tier. What this means is that at the end of the day, your cash and on cash return for this $50,000 is going to be 60.82% as opposed to 46.2%, which is a 31% increase. So that's quite a benefit. And it's a benefit in the way that we not only give you capital, we give you capital that generates return. Special bonus number 2 is going to be if you invest over $50,000, the return of your Sky Invest fee during the profit split. So during the first profit split, we will return the Sky Invest fee as well. So that would mean that you could be making 77.82% instead of 46.2, which is a 68% increase. If you decide to join us in the next 48 hours, 72 actually, we are giving you an additional $500. That is for fast action takers if you decide to join today or in the next 72 hours. And this is what you are getting. For $5,000, including all the bonuses. But what we decided to do is to actually create a year-end special. Now, you know, some people have Black Friday specials and everything, and we do understand that it takes a while to make this kind of decision. So we decided to extend the special offer until the end of the year. But of course, if you invest after 72 hours, you may not receive the special $500 fast action bonus. So we're going to give you an extra 30% off from the Sky Invest fees, which means that Sky Flip or Sky Rent will be only $3,500, saving you $1,500, and Sky Duo is going to be $5,950. But think about it, you still get the matching capital. So is it worth buying Sky Duo and getting $5,500 back pretty much right away the minute you do your first investment? And this is money that will actually generate funds for you. So that's the offer for the moment. You can get started right now by going on the link below, and make sure you use the discount code YourN30 so you can get the discount. Otherwise, you will pay the full price, which is $5,000 or $8,500. And of course, we are extending this offer for you, so you don't want to be doing this. And then we understand that sometimes you want to make sure that you secure the bonuses, but you might not be able to commit straight away. So your other option is to actually lock in the bonuses with 100% fully refundable deposit. It will be refunded in full to you if you notify us within 72 hours that you've decided not to go ahead with Noble Sky. But if you decide to go ahead with Noble Sky, this will lock in your bonuses for a while, about 2 weeks, not 6 months. Does that make sense? So the refundable deposit, the link for the refundable deposit will be open only until midnight tonight. So if you want to go for the refundable deposit, remember you can only go to that link until midnight. But you can also just choose to go directly to paying the very, very special fee that we had. Right. And also remember to claim your bonuses by giving us a great review on Google or on Facebook. Right. So I made space so that we could have questions. So now would be a great time if you have questions that you want to ask. And first, let me say thank you to those of you that stayed on through the day, because of course it is Sunday and I'm pretty sure you could do many other things than just learning about US real estate. And I really appreciate you staying on and interacting with me. So if you have any questions, feel free to unmute yourself and ask the questions. And if we don't have any question, I will stay on for another 5 minutes. And please feel free to put a question in the chat box as well.